So tell me everyone, how are studies going on? Nidhi, how are things going on at your end? Tell me.
Fine, but I'm a little nervous.
What?
Sir, I'm a little nervous. I'm
Regarding?
not confident, about the exam only.
Huh?
Sir, about the section B part.
Okay. है ना मैम, हेल्प कर देंगे, ठीक है, कोई टेंशन मत लो, दैट ऑल थिंग्स विल हैपन. हाय मनीषा, चलो आ जाओ जल्दी. सो आई हैव जस्ट ज्वाइन फॉर वन और टू थिंग्स. एक तो नीड टू टेल यू that this is my own venture, correct? I am the owner of this organization, Super Infinity Education, right? Yukti was also there, no? Yukti, I think you were there with me in FM, if I'm not wrong, correct? So those who are there in FM or maybe a UK tax, correct, probably know me. There are a few new names that I see, correct? How many of you don't know me? Tell me. How many of you don't know me? ऐसा कोई है जो who does not know me, right? So people, those who know me, correct, know that I teach what? FM and UK tax for what? ACCA, correct? Now I'm launching an AFM batch, correct? And ATX batch probably next quarter. If I get good admissions for ATX, then ATX also we can launch. As of now, we are also launching skill level batches, right? So let's say if you are left with any of the subject, or if that subject is troubling you, correct? We've got a good offer for you at the skill level. Skill level and P level both we are launching. In P level, we are launching SBR and AFM. I have a faculty for SBR, right? Probably you'll get the message in a day or two, right? Just as your exam is done third ko, fourth ko probably you'll receive messages, right? That how it is going on, correct? So your skill level as well as P level, both batches we are launching. Skill level, any subject if you take, as of now I've priced it at 7,500, right? So if you want, right, if you do it before the batch starts, so 16th generally all the batches will start 16th March. If you do it before that, then you will get the same at 1,000 rupees off more. So there's a code that will be generated if you do it before 15th, and you will get somewhere around for 6,500 any skill level paper, and any P level paper is for 14,000. You will get it for somewhere around 12,000. I've thought about the pricing a lot. A lot of people told me, okay, pricing sir बहुत low है and all that, but it is for you all that simple calculation that I'm doing, right? What is a simple calculation that I understand? You all have paid some or the other money somewhere, correct? And 2,000 rupees a month is not a very big amount, correct? Instead of doing it somewhere else and failing, right? It is better to just take what, 6,000 ka additional investment, 6,500, correct? And attending the batch, right? So I have done it for all of you. Ma'am, have you posted the message in the group? Just a second. Let them join. So anything else, any other doubts that you have or any queries, tension, problem that you have with as of now audit paper में, don't worry about that. Probably क्या third को paper है ना? The paper is on third, right? So hopefully you all will, right, go through it. Ma'am will go through the portion today 4 to 8, tomorrow 4 to 8, right? Any doubts or something of that sort at the end of the class you can ask ma'am, right? Ma'am, I think you've prepared the notes as well.
Yeah.
PDF copy of the notes will be shared with you. No worries on that front, right? So you can refer those notes. So ma'am, send the notes. If you made the notes, abhi notes, so if they can open in the what?
No,
Soft
sir, I'll share it tonight so
Share
that
it
they're aware what is it.
So she will share it tonight, right?
Day 1 tonight and tomorrow again, day 2 after the class.
No problem, right? So I think more people, I think it's almost 4:10. I think, ma'am, you start. I'll
Yes.
leave, right? Just one thing I would say, right? We all are very open about whatever suggestions you bring in, correct? If you want to take the next quarter ka batches, right? No problem. You can ask ma'am, right? One or two questions that you have doubt with at the end of the lecture, right? She can go ahead with it, right? So what you should do is, logically what I've understood is, you complete this, right? By third you get done with it. Third we'll shoot a message asking you how was the paper, and probably fourth we'll ask you about what, or you can even book my time, correct, for next quarter. If you have to do plan your next quarter, we can together meet and plan your next quarter, correct? So any after third, from fourth only it will be what, open. So from fourth I will keep on calling and we can have a one-on-one, right? New students who don't know me, correct? We have, I think, Shreyanshi is there, Chirag is there, Saurabh is there, Ishita, Disha, Sanskruti, correct? These students probably don't know me, right? Or you know me. Bhakti is, I think, old student. Everyone else, I think, yeah. So new student, right? If you have problems, correct, in planning your next quarter, right? So once your exam is done on the third, from fourth, I will be available on call as well as on this Zoom or Google Meet platform, right? You can connect with me. Any whichever way, I'm going to call you after exam to ask how the paper was and other details for what you will do for the next quarter. So again, I'm repeating, next quarter, if you want to do any skill level paper, we'll offer at 6,500. The features of the batch are very simple, correct? 100, 90 to 100 hours class will go on. Concept as well as practice will happen in class. You will get recordings, backup of all the recordings for a year, correct? 6 months to 1 year, right? You will get all handwritten notes, one mock paper at the end, correct? And like this last day revision or revision batches that will go on, you will get access to those batches as well, right? So now audit is done. Any four remaining four papers, or AFM or SBR if you want, right? Any P level paper 12,000, any skill level paper 6,500, correct? So anything else that you need, I have a 20, you have a 24/7 what call system available. I hope everyone has my number. I'm in that group, right? So if you don't have my number, correct, you can take it up from the group. You can anytime call me. Even if you need any help from ma'am, correct, you can take a time from ma'am to call or message, right? And you can talk with her, right? Then can I leave? I think your class should start now, or else it will not get over by 8 p.m. All the best to all of you. Any doubt, query, please feel free to call, message. Okay. Take care. Bye bye.
Thank you, sir.
Welcome. Bye bye, guys. Bye.
Ma'am, you're not audible.
Just a second. Okay. Am I audible?
Yes, ma'am.
Yeah. Okay. So between the class, I don't want anyone to on your audio. Any doubt if you have when we are revising the concepts, what you can do is you can take a pen and paper and keep on noting down your points. And then at the end of the session, after like 8 o'clock or 8:30, whenever we are completing, then you can sit with me and we can solve your doubts. Is it okay?
Okay.
Okay. Any problem in audio video, you can share a chat, you can chat, you can send a message, or you can raise your hand. Okay. Okay. So let's start. Is the audio video clear? Just send a chat message so that we'll just start now. Okay. Just a minute. Give me a minute. Okay. Okay. Let's start. Okay. What do you mean by auditing? Auditing is nothing but challenging or questioning items or amounts of financial statements. What does this mean? What do you mean by auditing? Now, let us take an example. For example, an accountant is there. He wants to account rent expenses. What he'll do, he'll just put an entry, rent expense account debit to cash or bank account. But as an auditor, what we will do? We will check. We will have a questioning mind. Why this amount of rent is only 20,000? We'll ask them, give me the rental agreements. Show me the rental agreements. You'll ask, show me the bank account, whether this much have you received or not, if it is a cash entry. Correct? So this is called as questioning mind or challenging the amounts or items in the financial statements. What do you mean by financial statements now? 5 things. Statement of SOFP, SOPL, statement of changes in equity, cash flow statements, and notes to financial statements. One question. Can the auditor question the operating decisions of management? Can the auditor question the operating decisions of management? Type in the chat box. Can the auditor question the operating decisions of the management? Type in the chat box your answer. Yes or no? Yes or no? Correct. The auditor cannot question the operating decisions of the management. For example, if the management is keeping 25% discount, 30% discount, or giving any item for free, the auditor can't question why are you giving it for free. It is their business, their operations. It is their way of doing business. As an auditor, we cannot question the operating decisions. Okay, so whenever we talk about financial statements, you have to remember all these 5 items are included. Okay, next. Who are the users of financial statements or who is interested in the balance sheet? It is the stakeholders. Now, what are stakeholders? Shareholders, customers, suppliers, government, lenders, and employees. These are all called as the stakeholders. Now, why auditing financial statements is required? So that the stakeholders can make informed decisions, can they take decisions. For example, let us take example of shareholder. Why shareholder is interested in the financial statements? So be active, okay? Be active in the chat box. I'm reading your messages, okay? When I'm asking some questions, keep on answering so that it will be like an interactive session. Okay, whatever you know, just keep on typing. Okay, so why shareholders are interested in the balance sheet? Shareholders are interested to know whether they have to invest in that company or not, whether the company is making profits or not, whether the company's share price is increasing or not. So that's the reason shareholders will be interested in the financial statements. Customers, why are customers interested in the financial statements? For example, the Maggie case happened, right? So because of the Maggie, there was some item, lead was there, right? So because of that, the Maggie sales decreased, right? And the customers were affected because of that. So even customers are interested. So what is happening in the business? Why are suppliers interested in the financial statements? Why are suppliers interested in the financial statements? The suppliers are interested to know whether the company to whom we are giving the goods, whether they are credit worthy or not, whether they'll be able to repay the money back or not. That's the reason suppliers and lenders are interested in the balance sheet. Government, why are government interested? Tax payments, right? So government are interested for tax. Why are employees interested? To know whether they can have the career in that field or not, in that business long term. So employees are interested. So users of financial statements, stakeholders. Next, structure of client. Now, whenever we use the word client, client is nothing but the entity whom we are auditing. That is called as client. There will be 3 levels in that. The first level is called as those charged with governance, TCWG. Those charged with governance. Who are those charged with governance? Nothing but the directors, the audit committee, all those are those charged with governance. You have to use the word those charged with governance is a technical word. In exam, you have to use those charged with governance. You can't use the word directors. Then second level of structure of client is top management. Who comes under top management? Who comes under top management? CEOs, CFOs, all those come under top management. Next, other staff comes, all those employees, everyone else will come under other staff. So this is the structure of client. So they are responsible for them, means they have to report to them and they have to report to them. Correct? They are accountable. Next, who prepares the financial statements? Tell me, who prepares the financial statements? Be active on chat. Be active on chat and keep on messaging. Shortcuts is also okay. You can type shortcuts. Okay. So who prepares financial statements? Be very careful. The management is responsible for preparing the financial statements. Auditor doesn't prepare the financial statements. Okay. Auditor audits and management prepares the financial statements. Next. Now, audit. Is audit done by one person? Can audit be done by one single person? Yes or no? No, right? Yes. So audit is done by a team of people, team of members. So who is the person who signs the audit report? Who is the person who signs the audit report? Quickly type. Who is the person who signs the audit report? Key engagement partner. What is he called as? Key engagement partner. Yes, you're right. Okay. So who is the person who signs the audit report? Key engagement partner. Under key engagement partner, there'll be so many audit managers. There'll be so many audit managers. Under each audit manager, there will be audit senior or audit supervisors. Then after this, Below them, it will be audit junior or associate. Below them, there will be trainees. This is your first level. After becoming affiliate, this is your first level where you will join as a trainee. So this all together forms a team. In this also, there will be two to three audit managers, 2 to 3. If it is a big company, we want many members, then this is the procedure and this is the way audit team is formed. Next, who appoints the auditor? Tell me, who appoints the auditor? Who appoints the auditor? Shareholders. Shareholders in the AGM. AGM is annual general meeting. Appointment of auditor is done by shareholders in the AGM. Okay. Now, before going to this, let us understand one more thing. Now, what is the objective of auditor? What is the objective of auditor? What is the objective of auditor? Objective of auditor. Tell me, what is the objective of auditor? Objective of auditor is to express an opinion whether the financial statements are free from material misstatements due to fraud or error. Correct? What is objective of auditor? Is to express an opinion whether the financial statements are free from material misstatements due to fraud or error. Now, when I say material misstatement, okay, let us go to this word material misstatement. Before this, let us start procedures before accepting audit. What are the procedures before accepting an audit? What are the procedures before accepting? Means before you accept an audit, what procedures you have to follow to know whether you need to get an answer whether you have to accept the audit or not. Okay, you have to see in within us whether there is enough of expertise, whether you have expertise to do it. Why expertise is required? Expertise means what? Expertise means what? Knowledge about IAS, IFRS, right? Only if you have the knowledge of IAS, IFRS, only then you can audit financial statements. Correct? Only if you know about it, then you can audit it. Capacity. What do you mean by capacity? What do you mean by capacity? Capacity means whether you have proper resources or not. Correct? For example, there is a big company who has come for you to get its financial statements audited. Now, for example, you are a sole proprietor. You have hardly 4 or 5 members. Can you audit that big company? Can you audit Reliance company? No, right? Because you're not capable. So capacity. So expertise, capacity. Auditor should ensure he or she is independent. Independence is important. For example, can the maker be the checker? Can the maker be the checker? No, right? So always the maker should be different and the checker should be different. So there should be independence. Next, auditor has to avoid conflict of interest. We'll be studying this year, conflict of interest. Next, complexity of client's business. What do you mean by complexity of client's business? Complexity of client's business means what? For example, if a business has so many subsidiaries, so many branches, so many offices, so many godowns, then, for example, banks, insurance companies, all those are manufacturing companies, all those are complex businesses, right? So you have to think that also, that whether you will be able to handle those. So all these are procedures before accepting an audit. What is integrity of management? What do you mean by integrity of management? Integrity means what? Honesty. Whether you can rely on management or not, whatever is saying, whether management is honest or not. Internal controls. We'll be studying in depth about internal controls. So you have to check even the internal controls are there or not. Basic internal controls you'll check before accepting an audit. Whether there is any evidence of fraud or non-compliance with laws or regulations. Now tell me, you have not yet accepted the audit, right? Again, listen to me carefully. You have not yet accepted the audit, correct? How will you come to know about non-compliance with laws and regulations or fraud? Because you've not yet got anything, any information. You're just seeing whether the client has come to you. You're just seeing whether you'll be able to accept the audit or not. So how will you get to know about the fraud or non-compliance with laws or regulations? No, we are doing this year's audit, right? So it can't be previous years. In this current year, how will you know about any evidence of fraud? It is evidence of fraud or non-compliance with laws or regulations. Come on, come on, come on. Through news, through social media, through all these, you'll get to know whether the company has made some fraud or not, right? The first, if company has done some fraud, some big scandal or something, that comes to known to whom? To the journalists, right? So from there we get to know, from news channels, from newspapers, from all that we'll get to know whether that company is having any, has done any fraud or something. That is before accepting audit. After accepting audit, you will check the financial statements, you'll get to know about the fraud and all. Next, auditors should ensure that the preconditions to the audit are present. This will be studying as the next question, okay? Next question will be studying. Preconditions to the audit are present. So auditor should also communicate with previous auditor after obtaining permission from the client. So these are the procedures before accepting an audit. Now, before starting again all this, I hope you all are aware of all this, that section A is of 30 marks, section B is of 70 marks, right? 30 marks, 70 marks. 30 marks is all objective type questions, and this is descriptive type questions. You have to write. So in this objective type questions, I'll tell you, there are four main chapters. There are four main chapters. That is subsequent events, going concern, professional ethics, and corporate governance. These four chapters, very important for objective type questions. The rest marks you can get from anywhere, any point. One will be audit opinion also. Opinion chapter, one question. In direct theory, in descriptive type questions, you have three case scenarios, correct? Audit risk case scenarios, internal control deficiency case scenarios, and substantive procedures case scenarios. You'll have that. Along with that sub part, you'll have some direct theory questions. So whenever I'm mentioning DTQ, that is nothing but direct theory questions. Apart from these case scenarios, that three case scenarios, you'll have some questions called as direct theory questions, which are all these, which I've mentioned direct theory questions. So you have to learn that. And direct theory questions comes for maximum 6 marks. Maximum 6 marks. So 6 points are enough. But learn 1 or 2 extra so that in case you forget 1 or 2, you can write that. But maximum it comes to 6 marks. You have to write 6 marks, 6 points, and you get full marks. Okay, so let's continue now. Coming back, so these were the procedures before accepting audit. Now here we had two more things to discuss, that is conflict of interest and preconditions. Let's move on to that. Now, conflict of interest. What are the conflicts of interest? Okay, so when auditors personal interest conflict with the client, when auditors personal interest conflict with the client, now that means independence is hampering, correct? So that time, will you accept the engagement, yes or no? If independence, if the auditor's personal interest is conflicting with the client, will you accept the audit or no? No, you should not accept the engagement. Now, next, when interest of two competing clients conflict, when you have two clients and their business is same, their business model is same, so that time can you accept the audit or not? There is condition, that is auditor can accept the engagement after applying the safeguards. Two competing clients means, for example, two businesses of having same businesses like car businesses or very big, for example, Jio, Vodafone, or something like that. So if it is competing clients and their interest conflict, then you can, as an auditor, you can accept the engagement, but you have to apply safeguards for that. Now, what are the safeguards when there is conflict of interest between competing clients? This is the direct theory question. You have to learn this 6 points. So what are the safeguards when there is conflict of interest between competing clients? Let us take an example of competing clients. For example, there is Maruti Cars and Tata Motors. Okay? Maruti and Tata Motors. Okay? We as an auditor, we have two clients of same businesses. Now, what will be the conflict? Confidentiality, data confidentiality, right? We can tell them their secrets. So we have to have safeguards. We have to apply safeguards. What are the safeguards now? Inform TCWG of both the clients. We have to inform the TCWG of both the clients. TCWG is the top directors, all those. You have to inform them that we have another client of the same business model. So if to inform TCWG of both the clients, advising one or both clients to seek additional independent advice. We'll tell either of them you can go to any other auditor. We are advising them. If they don't have problem, they can continue with us. If they're having some problem with we auditing the other competing client of theirs, competing business, then we'll advise them to seek additional independent advice. Means you can take any other, you can make your audit from any other person, any other auditor. Use separate engagement teams with different engagement partners and team members. Use separate engagement teams with different engagement partners and team members. You're an audit, right? You'll have so many members. So keep two different teams for both the competing clients. Next, clear guidelines for members of each engagement team on issues of security and confidentiality. We'll give clear guidelines to the team members, our team members, about the confidentiality and security. Next, sign confidentiality agreement with employees and partners of the firm. We have to sign the agreement. We'll tell them to please sign the confidentiality agreement so that now they become accountable. Correct? They become responsible. Anything in written format, anything will be always having much value than oral. So regular monitoring of the application of the above safeguards by a senior individual not involved in either audit. Regular, you have to monitoring that the safeguards are properly applied or not. So these are the safeguards when there is conflict of interest between two competing clients. Next. So till now we have studied two direct theory questions. One was procedures before accepting an audit and one more was safeguards when there is conflict of interest between competing clients. Now one more question was there, no, right? In that preconditions to an audit. So what are the preconditions to an audit? Very important question. Okay, you have to understand what are the preconditions to an audit. There are 4 preconditions. First one is determine whether the financial reporting framework is acceptable. Determine whether the financial reporting framework is acceptable. If you know about this AFRF, applicable financial reporting framework. Applicable financial reporting framework means what? What do you mean by applicable financial reporting framework? Applicable financial reporting framework means whether the accounts are prepared according to the proper format, according to IAS, according to IFRS. Correct? You just can't randomly prepare in your own style. So the financial statement should be prepared according to the financial reporting framework. That is the first precondition as to an audit. That is the precondition to an audit. You have to audit only those financial statements which are as per the financial reporting framework. Be very careful. So this is the first point. Determine whether the financial reporting framework is acceptable. Second is obtain management's agreement that it acknowledges and understands its responsibilities. So we have to take management's agreement that management's responsibilities are preparing the financial statements is management's responsibilities. Internal controls is management's responsibilities. And providing the auditor with access to all information and unrestricted access to all stuff. So all these things, the management has to give us in writing in an agreement that it acknowledges and understands that it's its responsibilities. It is not our responsibility. It is his responsibility to prepare the financial statements, to prepare the internal controls. Correct? And they have to provide the auditor with all access to all information and unrestricted access to all staff, all members. So preconditions are 4. First one is that you have to repeat at your home along with me so that you're revising it. Okay, it should be two-way communication. When I'm telling revise, revise. Okay. So what are the 4 preconditions to an audit? Determine whether financial reporting framework is acceptable. That is, it is as per applicable financial reporting framework or not. Second one, we have to obtain management's agreement that it is its responsibility to prepare the financial statements, to have internal controls, and to provide the auditor with all access to all information and unrestricted access to all stuff. These are the 4 preconditions. Now, let us come to conclusions. Once we got to know about the preconditions, we have to see now. If as an auditor, now we have to see preconditions are present or not. If preconditions are not present, auditor shall discuss the matter with management and shall not accept the audit engagement. Very important. If preconditions are not present, first you discuss with the management and then do not accept the engagement. Done. Chapter close. Next, if preconditions are present, what am I telling? If preconditions are present, auditor can accept the audit. Now, if auditor accepts the audit, he has to prepare an engagement letter. Again, first you have to check whether the preconditions are present. If it is present, accept the audit. After accepting the audit, prepare an engagement letter. Now, what do you mean by engagement letter? Engagement letter is nothing but written terms of an engagement in the form of letter. It is nothing but the written terms in form of a letter. And when should be the engagement letter be given? This has to be done before the audit engagement begins. As to avoid, why this has to be done before the audit begins? To avoid misunderstandings regarding the audit. Clear till here? Clear till here? Slowly we'll get the rhythm. Okay. Yes. So let's continue. So now we just finished 3 direct theory questions that were procedures before accepting an audit, all those expertise and all. Then second was conflict safeguards for conflict of interest between 2 competing clients and preconditions to an audit. Correct? Next. Now, once the engagement letter is prepared, and that should be prepared before audit, right? Before audit starts. Now, list the contents of engagement letter. This is also a direct theory question. List the contents of engagement letter. Objective and scope of audit. Auditor's responsibility. Management's responsibility. Just now we studied management's responsibility. There are 3 responsibilities: financial statements, internal control, and providing access to all information. Applicable financial reporting framework is nothing but IAS, IFRS. The financial statement should be prepared according to IAS, IFRS. Expected form and content of any reports. In prior only, we are telling that this should be the content of any form or any report if they are asking for. Inherent limitations. Unavoidable risk that some material misstatements may not be discovered. Inherent limitations. What are the inherent limitations? Time factor, right? Nature of entities, nature of reporting. All those are inherent limitations in an audit. Written representations, we have a ISA which we will be studying, and fees and billing agreements. Correct? So these are the list of engagement letters. Objective and scope of audit. What is the objective? Objective of audit, we said, no, it is only to give a reasonable assurance whether the financial statements are present or not. Now, does an auditor give reasonable assurance or absolute assurance? Quickly type. R or A. Always gives a reasonable assurance and never gives an absolute assurance. Correct? Absolute assurance means 100% assurance. Can an auditor give 100% assurance? No. Because audit is done on what basis? It is done on sample basis. We cannot audit 100% items. Correct? What is reasonable assurance? Reasonable assurance is nothing but high level of assurance. High level of assurance, but not absolute assurance. That will be studying further. Okay. Now, recurring audits. What do you mean by recurring audits? Recurring audits is nothing but continuous audits. This year you have done, next year also you're doing, next year also you're doing. In that case, what happens? If the audit is recurring in nature, there is no need to prepare engagement letter each year. Correct? If audit is recurring in nature, you need not prepare engagement letter each year. only in these following situations, only in these situations, you have to prepare engagement letter each year. Okay, what are those situations? Management misunderstands the term of the engagement. If in any case the management has misunderstood the terms, then you have to revise the engagement letter. So what are we studying? This is a direct theory question, very important. You have to know that which are the cases where engagement letter needs to be revised. Normally you don't have to keep on making the engagement letter every year on year. You can use the same engagement letter, but revision in engagement letter is required only in these following situations. If these following situations occur, then engagement letter needs to be revised. What are those situations? Management misunderstands the terms of the engagement. Revised or special terms of the audit engagement. If you're revising some terms, there's some changes in the terms then. Change of senior management. When the management is changing, that time also we have to revise the terms so that you can have fresh negotiations with them. Change in ownership. If the ownership is only changing, again you have to revise it. Change in nature or size of the entity's business. Now entity has grown more. There are subsidiaries. It has become a holding company. So that time you have to revise the engagement letter. Change in legal or regulatory requirement. If there's some changes in law, then change in other reporting requirements. So these are the situations. Only then engagement letter needs to be revised, or else need not revise engagement letter each year. Need not prepare engagement letter also each year. Now, this engagement letter preparation, what we are telling about the revision, it is at the beginning of the audit. Now, change in terms of engagement letter. Change in terms of engagement letter. If the auditor is asked during the audit, now what we're studying is during the audit, if the management asks us to change some engagement, they change some terms in the engagement letter. So what should we do? This is what it is. So if the auditor is asked to change the terms of the engagement letter before it is completed, means before the audit is completed, during the audit we are telling, the auditor shall determine whether there is reasonable justification for the same. If it is reasonable to change, for example, Corona had come, right? So that time some changes had to be made. You can't do physical verification that time. So that time you can revise. So there should be some reasonable justification for changing the terms. If the terms are changed, the auditor and management shall agree and record the new terms in the engagement letter. If the terms are changed, the auditor and management shall agree and record the new terms in the engagement letter. If the auditor does not agree, it is not reasonable justification according to the auditor, then the auditor shall withdraw from the engagement. It is a technical term. Withdraw from the engagement means you have to resign from the audit. You don't have to do the audit. You should resign from the engagement and determine when there is determine whether there is an obligation to report this to other parties. And you have to determine whether there is an obligation to report about this resignation. Done. So now, let us take a 2-minute breather. And I'll just tell you what is our agenda, okay, for today and tomorrow. Our today's agenda will be till now everything is going smooth, hopefully. Okay. So our today's agenda will be to complete all the direct theory questions, audit opinion, subsequent events, going concern. Okay. All this along with basics of audit risk. Basics of audit risk. We'll understand what is audit risk, how to write, how to do all that. That we'll study. And internal control deficiencies, we'll see. If time permits, we'll start this. And that tomorrow's plan will be starting with corporate governance and professional ethics tomorrow. In 45 minutes, we'll do this. And then we'll start with audit risk case scenarios. We'll start with that. Okay. In audit risk case scenarios, what I'll do, obviously we'll not be able to discuss all the case scenarios. But what I'll do, I'll take a few. For example, I'll take a handful of 10 to 15 audit risk case scenarios and I'll explain you how you have to present in exam to get full marks. Okay, I'll explain you how you have to write the points, how much point is required, what is required. So with that help of 10 or 15 audit risk case scenarios, I'll help you to understand that how if you present in the exam, you'll get full marks. Okay, in Auditor's case scenario, this is the discussion of 1 hour 15 minutes. We'll do Auditor's case scenario discussion, because today only we'll do the basics, so that tomorrow you're little prepared when we are discussing about the case scenarios. Then we'll be doing about the substantive procedures. This is our agenda. Okay. If time permits, internal control will start today or we'll do it tomorrow. Okay. Okay. Keep on drinking water and keep yourself hydrated, because it's a theory subject. It's actually a very practical subject, but made into theory. Okay. How is the preparations going on? Unmute yourself and you can speak. We'll take a 2-minute breather. बहुत डर लग रहा है. Exam is on Monday, right? Okay. Have you given mocks, at least one or two mocks? Nervous. Okay. Given mock. So how much you're scoring in that mock? At least you're scoring 50 plus. Hopefully. Okay, good. No problem. We'll be able to do it. See, whenever there is direct theory questions, no, you should never lose marks in that. Case scenarios, what happens? Sometimes they'll not give marks. We can't guarantee about case scenarios marks. But direct theory questions, you should try to score good marks, because it's in you, it's you who have prepared for that. Case scenarios, you don't know what will come. The direct theory questions, you know what will come. At least 1 or 2 questions will be new, obviously. See, whenever there is a question, right? Whenever there is a question paper, 60 to 70 marks will be very manageable paper. But what happens, students seeing that 20 to 30 marks, which comes like out of box, or maybe you don't know that question, or maybe you've not come across that question, seeing this 20 to 30 marks, they will lose this 60 to 70 marks also. Correct? So whenever you're writing paper, when you don't know anything, don't worry much. Just give a pause to that question, flag that question, and go to the next question. Attempt, first criteria to pass an audit subject is attempt 100% paper. 100 marks paper you have to attempt. Very crucial, yes. Whether you know, you don't know the answer, you have to attempt. Correct? Once you attempt 100 marks paper, then you'll be able to score near 60, 65, 70, like that. If you're attempting only for like 80, 90, 70 marks, how will you score? How will you pass? Correct? So, see, for example, I'm telling you about objective type question, okay? Section A. Okay? Section A, subsequent events, going concern. These two chapters together, you'll get one case scenario, correct? Of 10 marks. Am I right? Out of this 10 marks, 3 questions will be very simple if you have practiced. If you have practiced the objective type questions, 3 questions, that is 6 marks, you can easily score. Remaining 2 questions also you can do it. But I'm telling 6 marks guaranteed hota hai. It is guaranteed. But these 2 questions, remaining 2 questions, which is carrying 4 marks, that depends on your preparation level. That depends upon your analytical skills, whether you're by hearting or you're understanding your concepts. Okay. One more thing is professional ethics and corporate governance. Together, 10 marks, one case study. Correct? That also same. 3 questions, that is carrying 6 marks. Okay? That also, again, it's in your pocket. So total out of MCQs, 30 marks, right? 20 marks, you know the syllabus. 4 chapters. Correct? But most of the time, it is 4 chapters. Most of the time. So out of this 20 marks, 6 plus 6, 12 marks, 12 marks as guaranteed marks. If you have prepared all the questions, you have solved all the questions of study hub, your kit, exam kit and everything. 12 marks is guaranteed. Plus, I'm telling you 12 to 16 is guaranteed. 12 is minimum, 16 if you have worked hard, if you have prepared well, if you have done cumulative revisions. The remaining 4 marks, they'll ask some new questions. But if you understand the concept, or if you can put your analytical skills, then you can score that also. But I'm telling 12 to 16 out of this 20 is easy scoring. Remaining 10 marks in section A will come from any other chapter. It can be audit, opinion. Audit, opinion also one question will come normally, 2 marks. That also you should be thorough with. Then any other chapters, anywhere they can ask anything. Remaining 10, 12 marks. Correct? Next, coming to section B. Section B is substantive procedures you can easily score. And many people are doing that also. Substantive procedures is what? It is like, आपको आता है तो आता है, नहीं तो नहीं बस. Correct? Substantive procedures is such. If you know it, you know it, or else you don't know it. That's it. Coming to internal control deficiency and audit risk case scenarios. In that, you should just know what examiner wants. Correct? To score marks. If you know that, how you have to write the answer, you can do it. We'll be discussing more about this tomorrow, about the audit risk case scenarios, but section A, I was just clearing it. Okay. Now let's start again. Again, what happened? Section A, ma'am, can you please tell the proper way to approach the questions, as in which section to attempt first? Yeah, that will be doing after once we are done with the syllabus, right? We'll be discussing this tomorrow. More about section B, we'll discuss about tomorrow. Okay? Okay. You're not owning your cameras, is it? How will I see you? You all are sitting straight and all, right? With book and pen, using your notes. I'll be sharing this day 1 notes today night, okay, in PDF format, so that you can go through the direct theory questions, you can revise it, you can see some points. If you're following some other material, you can use that. There is no problem at all. It is just a revision kind wherein your concepts are strong. Correct? Okay. So now let's start again. Okay, let's start with materiality now. Come back. Okay. Now, always we use the word, right? Material misstatements, correct? First, let us understand the essence of what is materiality. Correct? A simple example I'll give you. For example, Yukti. Yukti has a business of 5 lakh rupees. Okay? And who is another person? Disha. Okay. So Yukti is having a business of 5 lakh rupees, and Disha is having a business of 1000 crore rupees. Okay. Now, I found a misstatement of rupees 10,000 in both the businesses. Okay, I'm giving you just a simple example to just understand what is materiality. Okay. So 10,000 rupees in both Yuktas and in Divya's and in Disha's. So tell me that 10,000 will matter to whom? Yukti or Disha? Type in the chat box. Yukti or Disha? Yukti's turnover is 5 lakhs business and Disha's is 1000 crores. Yukti is right. So that is what materiality comes into picture. Correct? Materiality means it can't be fixed. Can we fix one amount for materiality? No, we can't fix it. Okay. So materiality depends on the nature of the business. Correct? From business to business, it differs. Materiality differs. Now, materiality in planning and performing audit. Understood by material misstatements. We just if you found a misstatement, you'll not always be, it is not relevant to us. Only if it is material misstatement, it is relevant to us. So always use the word material misstatements due to fraud or error. This is a technical word. What is it? Material misstatements due to fraud or error. Okay. Materiality. Materiality in planning and performing an audit. Misstatement is considered material if they individually or aggregate could influence the economic decisions of users of the financial statements. Correct? If a misstatement is influencing the economic decisions of the users of the financial statements, we have studied no users of the financial statements, stakeholders. So if their decisions are being influenced, then it is material. Materiality level for an audit is set by the auditor using his professional judgment. Correct? It can't be defined, it can't be fixed, it can't be standardized. Using the professional judgment, the auditor decides what should be the materiality level. Materiality for the financial statements as a whole and performance materiality. These two are different concepts. Materiality again. Materiality for the financial statements as a whole and performance materiality should be set at the planning stage of the audit. Now, what do you mean by materiality for the financial statements as a whole, and what do you mean by performance materiality? Okay. Tell me, type no in chat box. I'll give you just a minute. What do you mean by materiality and performance materiality? Very important. You have to know the difference. The first step is always we'll check the materiality. What should you set the materiality level at? So what do you mean by materiality of financial statements as a whole, and what do you mean by performance materiality? Okay. Just tell me one thing. Performance materiality will be greater than materiality level or lower than materiality level? Just give me this answer. Yes, performance materiality will be always be lower than the materiality level. Now, we'll come to that concept again. Now, let us understand the benchmarks, that is materiality for the financial statements as a whole. Means for the whole financial statements, we are setting one materiality level. We are setting one level. Again, what is this materiality for the financial statements as a whole? For the whole financial statements, we are setting one materiality level. For performance materiality, for individual ledgers, for individual amounts, for individual items, we are setting a level. That is performance materiality. Again, I'll give the clarity again in some time. Just hold on. So materiality for the financial statements as a whole means पूरे financial statements के लिए we are putting one level. Financial statements के लिए we are setting one materiality level. Performance materiality means for one item in the financial statements, we are setting a materiality level. So performance materiality is item wise, individual, it is individual level, it is at an individual level, and materiality is for the financial statements as a whole. So what are the materiality level for the financial statements as a whole? These are prescribed, okay? Only on this basis, you have to calculate this materiality level. You can't use your own this one. It is prescribed in ISA. So what are the values? On revenue, gross profit, profit before tax, profit after tax, total assets and net assets. It will clearly tell in exam, or they'll give you the case scenario. You have to calculate this materiality level. Okay. You have to calculate this materiality level. Now, for revenue, the percentage, you have to remember these percentages. Now, for in exam, you have to remember only these percentages, that is minimum percentages. Now, quickly, let me tell you why minimum. Okay. Why this minimum you have to remember. I'll tell you one example. Listen carefully, okay? Just a minute. Okay. Okay. Ready with the example? Yeah. If I tell I've set a materiality level of 10,000 rupees. I'm just taking a small example for you to make the concept clear. 10,000 rupees is my materiality level. Now, this 10,000 is 0.5% of the revenue. I'm just taking an example that this Materiality is 0.5% of the revenue. Okay, let me take it like this. Okay, let me take it like this. 1 second. My revenue is, you have your calculators, right? Keep your calculators ready. Your revenue is 10 lakhs. What am I telling? Revenue is 10 lakhs. So what will be the materiality level? Tell me. If I'm taking 0.5% and if I'm considering 1%, what will be the materiality level? You tell me. Chat box. What will it be? 5,000? 5,000 and 10,000, right? Okay. Now listen. If I'm considering this now, what am I considering? If I'm considering this first, the low materiality level. If I'm having misstatements as 2,000, 5,400, 3,300, 6,000, 7,500, 8,000, 9,000. Okay. Now tell me, if I'm keeping the materiality as 5,000, which all misstatements will be included? Means which all will be material for me? If I'm keeping the materiality level as 5,000, which all misstatements will be material for me now? If my materiality level is 5,000. Materiality level means above 5,000 or 5,000 is important items, that is material misstatements for me. Below this, I will ignore it. Correct? So which all will I take? 2,000 will I consider? No. 5,400? Yes. 3,300? No. 6,000? Yes, 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 yes. Now, with the same example, just one difference, I'll just make it. I'll just extend the example. 11,000, 13,000, 10,500. Okay. Now tell me, in this 5,000, even these will be included? Correct. Now, if I keep the materiality level as 10,000, what all amounts will be included, you tell me? Only this 11,000, 13,000 and 10,500, right? All these for me, it will become immaterial. So now answer, if the risk in the business, you understand about risk, right? We'll be studying about audit risk very soon, the basic at least. So if the risk is higher, your materiality level should be lower or higher. You can unmute and tell me. If the risk is higher, you tell me, your materiality will be higher or lower? Tell me. If the risk is higher, your materiality level will be lower. Correct? If the risk of material misstatement is higher, your materiality level should be always lower. If your risk is lower, your materiality level should always be higher. Be careful, they can ask an objective type question. You have to understand what it is. Understanding what it is. Correct? If you know in the company, the business, the risk is higher, always set your materiality level as low as possible so that more misstatements are coming into it. Correct? If you keep a materiality level at a higher pace, at a higher level, the smaller misstatements will not come under this bucket. We have to ignore that. Now, so that's the reason in exam, always you have to consider these as low as possible as your materiality level. So what are these? You have to by heart these, okay? They'll not give you in exam. We'll be taking some examples wherein you'll see whether you have to know these. Okay? Now, for revenue, it is 0.5%. For gross profit, it is 0.5%. For profit before tax, it is 5%. For profit after tax, it is 5%. So very easy to remember. Revenue, gross profit, 0.5%. You have to learn now only, okay? Because it's revision batch. Learn along with me only. Now only learn and focus. So revenue and gross profit, 0.5%. Profit before tax and profit after tax, it is 5%. And total assets is 1%. And net assets, it is 2%. Total assets means only the balance sheet side, right side. Net assets means assets minus liability. For that it is 2%. Very clear? Materiality. This also clear? If risk is high, materiality level will be low. If risk is low, materiality level will be high. Okay. Now, coming to what do you mean by performance materiality? Let me give you one example. Okay, let us understand what is performance materiality. Now, listen very carefully. This is my balance sheet. Oh, sorry, 1 minute. This is my P&L. This is my P&L, I'm telling. Now, here I have some items, okay? For example, rent expense, 20,000. Okay, 70,000. Very low it became, no? Rent expense, take it as 2,70,000. Let me write it clearly. Rent expense, 2,70,000. You have insurance. You have insurance of 1,50,000. You have some other items like electricity. You have of 2 lakhs. Now, what I have done is when I calculated with this revenue and all, see, benchmark you have to use only one. When you are doing audit, before audit you will set the materiality level, right? So there will be only one materiality level. That will be depending on your professional judgment, which item to be chosen. Okay, on any one item you have to go and calculate the materiality level. That amount will be your one materiality level. So for example, I have calculated the materiality level as 5 lakhs. Correct? See, it's an example, okay? So my materiality level is 5 lakhs. And in P&L, there are items below 5 lakhs. So if it is below 5 lakhs, I will not audit, right? Because it is immaterial. Am I right? Again, listen carefully what am I telling. I have set by calculating this, for example, I had taken total assets. On total assets, 1% I have calculated and I've got the answer as 5 lakhs. That is my materiality level, 5 lakhs. Okay. In P&L, materiality level 5 lakhs means whatever items below 5 lakhs is immaterial items. I have to ignore that items. I have to ignore that misstatements. Correct? Above 5 lakhs only I will take into consideration. Now I'm telling, in my P&L balance sheet, I have items like rent 2,70,000, 1,50,000 insurance, electricity 2 lakhs. These are below 5 lakh, right? Below my materiality level. If these are below my materiality level, I will ignore it. I will not audit only. Correct? No. Anyways, if I get misstatement also, it will be below 5 lakhs. That's when this performance materiality came into picture. Understanding? That's the reason performance materiality has come into picture. Because there will be some items which will be below your materiality level, but it will be very important. Correct? No, rent and all is important. Rent, insurance, electricity. Because all these if you total together, for example, there are some misstatements in this. All this if you total together, it will exceed 5 lakhs. It will exceed 5 lakhs. It will go more than my materiality level. Correct? So all this individually also it's important for me. Correct? So that's the reason performance materiality has come into picture. Now let me give you a practical life example for performance materiality. Everyone hydrate yourself. Cheers. Okay. Keep on drinking water. Water is a source which keeps your brain active. Okay. Okay. Now, let me give you one more example so that your performance, because no, why am I stressing so much on materiality, performance materiality is, even in interviews, they'll ask you these questions. What is materiality? What is performance materiality? You should know the meaning. Matlab, by heart nahi aana chahiye, at least you should know what it is. Correct, right? So let me give you an example. One practical life example, not audit related, practical life example to understand what is performance materiality and what is materiality level. For example, there is a lift, right? Okay. There will be capacity, right? Like only 1,000, for example, 1,200 kgs. Correct? 5 to 6% or something they write, or some persons they'll write 5 to 6%, 1200 kgs, something like that they'll write. Correct? Now, 1200 is the materiality level. Do you think that whatever is written in that lift, 1200 kgs, the manufacturer who is building that, they'll keep only 1200? No, right? Normally it will be more than that. Normally they'll have the capacity, for example, 1450 kgs. But in that notice, in that sheet, what they'll write it as 1200 kgs is the capacity level. Why do that keep that extra buffer of 150 or 250 some kgs? Because they know, no, they can be some circumstances where it can be more than that. Correct, no? So that 250, 150, no, that is the performance materiality. I don't know whether you understood or not. Hopefully you understood. So 1200 kgs was your materiality level. But the manufacturer, the lift would actually have a capacity of 1000, more than that only. Why that extra they are keeping? Because they know there can be some circumstances wherein that capacity might increase to that, more than that. So that's the reason, that is the performance materiality. They're keeping that buffer, that is performance materiality. The same way, we are telling these amounts individually, it might not be material, but when aggregated, it will be material, right? So performance material, now I will set my performance materiality as, for example, I have set my performance, for example, insurance, I'll just change the amount as 2,50,000, for example, okay? So now I will set my, just for example, I'm taking, okay, 3,50,000 something. So now I will set my performance materiality as 2 lakh, for example. This is my performance materiality. I'm setting my performance materiality as 2 lakhs. So now I will audit all these, right? Because my performance materiality level should always be set below materiality level, because all these are not included. Now when I set my performance materiality as 2 lakhs, all this will become included and I will audit it. Correct? Because individually the items are important. Now read performance materiality. Performance materiality refers to the amount set by the auditor at less than materiality level for the financial state. Objective type questions they can ask you, okay? So understand it. Less than materiality level for the financial statements as a whole. See, materiality is the financial statements as a whole, but performance materiality is always at, see, for a particular assertion or class of transaction level or at account balance level. Now, do you know what are assertions? We'll be coming to that next. What are assertions? What are account balances? What are class of transactions? All that will come to it. But you're understanding this is at individual level. Performance materiality is individual level, at assertion level, and materiality is at a financial statement as a whole. Next, the aim of performance materiality is to reduce the risk that the total of all the errors, in balances, transactions, and disclosures exceeds the overall materiality, right? All this is below 5 lakhs, below the materiality level. But if you total all this, will it be more than the materiality level? Yes, it will be more than the materiality level. So we are keeping one performance materiality so that all these also are included. Read the second point again. Aim of performance materiality is to reduce the risk that the total of all the errors in balances, transactions, and disclosures exceeds the overall level. Correct? The higher the anticipated risk, the lower will be the materiality. Correct? Higher risk, lower will be the materiality. Next, revision of materiality. Level of materiality must be revised. Can you revise the materiality level? Yes, of course, you have to revise it if needed. Level of materiality must be revised for the financial statement if required. When materiality level for the financial statements as a whole is revised, if materiality level you are revising, even the performance materiality will be revised, correct? So then the performance materiality should also be revised to a lower level to a level lower than the revised materiality for the financial statements as a whole. Basic, right? If you are revising the materiality level, even the performance materiality has to be revised. Done? Now, before this assurance engagement, let us do some important thing. Let us learn about audit risk so that everywhere we can use it. How to zoom in? Just a second. Okay. Now, first thing, let us discuss what do you mean by internal controls? I'll ask you one simple question. What do you mean by internal controls? What do you mean by internal controls? Tell me in your own language. I don't want the definition. Tell me in your own language. What do you mean by internal controls? Very good. People are active on chat. Okay. Controls by the management. Let me give you one small practical life example to understand what is internal control. Very basic example I'll give you. One or two examples I'll give you. This is your mobile phone. Okay. This is your mobile phone. If you want to keep your data secured, mobile phone, what internal control will you put? What you will do if you want to keep your mobile phone secured? Type in your chat box. You will put password, right? So that is an internal control. Bas, itna simple internal control. What is internal control? You are being responsible for it. You are keeping some controls so that there is no chance of error or fraud. Correct? One more example we'll take. If, see, example, this is office, okay? Or your college. You will have ID cards, right? Only by seeing your ID card, only then the security guard will allow you, right? So that is also an internal control for college people, for entrance. Correct? So that there is no other third person or no other stranger entering the premises. So that is also an internal control. Now, coming to your audit examples. What is internal controls and audit examples? Very good. Face lock, staff and all. Okay. What is an example for audit examples? Let us take in business examples for internal control. Segregation of duties, authorization. All these are examples for businesses. If you're having 3 people to do one work and you're having only 1 people to do one work, which will have less chances of error or fraud? For example, there is one person to make sales, there's another person who receives cash, there's another person who does invoicing, and there's another person who does accounting. Or these are 4 different persons. Now I'm telling, in one company there's only one person handling all these 4 items. Company A this is, and this is company B. Tell me, in which company is better, company A or company B? Which company you can rely on? Company A, right? Correct. So that is called as, this means internal controls are present in this, internal controls are not present in this. Now understood the basic example of internal controls? Now let's jump on to inherent risk. I'll tell you, there are 3 types of audit risk: inherent risk, control risk, and detection risk. Very simple, I'll tell you what is inherent risk, what is control risk, what is detection risk. What is inherent risk means there is no internal control. Matlab, only this one person is doing all the work. We'll just take this one small basic example to understand, since it's a revision batch. So only one person is doing and this one. So in company A, internal controls were there. In company B, internal controls were not there. So inherent risk means there are no internal controls. Very simple. Inherent risk means no internal controls. What is control risk? Control risk means internal control is there, but it is not operating effectively and efficiently. Means, I'll tell you, all these four people, no, they are best friends or they are from the same family relative. Now, or let us take the practical life example of password. For example, you have kept a password which is like normal L. Basic, no, everyone, almost like all our parents and all will have that password L. If you're keeping that password, means you're keeping internal control. You're keeping your password, your security, you're securing it. But is it operating effectively, efficiently? No, right? That is control risk. Control risk means internal control is present, but it is not operating effectively, efficiently. For example, in your offices, you'll have that, no, what is that called? Thumb impression. Only then the doors will open or your attendance will be marked. Correct? The company has put the machine, okay, for that attendance purpose. Means internal control is there. But that machine is not working properly. It is not working. It is not working. It's just for showpiece there. That means there is control risk. Means internal control, they put the machine, but it is not working. Correct? That is called as control risk. Internal control is present, but it is not operating effectively and efficiently is meaning of control risk. Understanding very thoroughly, because all this is required in, because everywhere will use the word risk of material misstatement, risk of material misstatement. In that, risk of material misstatement is nothing but inherent risk and control risk. We'll come to that. But understand the essence. What is inherent risk? What is control risk? Type and tell me what is inherent risk. Type in your chat box what is inherent risk. Inherent risk means there is no internal control. Very simple. Inherent risk means what? There is no internal control. What do you mean by control risk? Internal control is there, but it is not operating effectively and efficiently. Very clear with this? Yes, very good, very good. Now, what do you mean by, just a second. How do I go down? Okay, what do you mean by detection risk now? What do you mean by? What do you mean by detection risk? Tell me, what do you mean by detection risk? Okay, listen carefully. What do you mean by detection risk? Detection risk means risk that the audit procedures performed by the auditor will not detect a material misstatement due to fraud or error. Again, read it. Risk that the audit procedures performed by the auditor, will not detect a material misstatement due to fraud or error. That is detection risk. Maybe the fraud or error is so in depth, no, that you're not able to identify it. That is detection risk. You're not able to identify it because we do audit on a sampling basis, right? So there is a detection risk always. Now, if I ask you one question, which risk is because of the auditor and which risk is because of the management? Tell me. Type in your chat box, which risk is because of the auditor? First, you type me this answer. Which risk is because of auditor? Which risk happens because of auditor? Detection risk. Which risk happens because of management? Which risk happens because of management? Inherent risk and control risk, right? Because now one more question. It is whose responsibility to implement internal controls? Tell me. We already studied in the basic concept lecture. It is the management's responsibility to implement internal controls, right? Now, so that's the reason inherent risk and control risk is because of the management. Detection risk is because of the auditor because there is a risk that the audit procedures what the auditor is performing, no, it will not be able to identify or detect the risk, that is the error or fraud in the financial statements. Now, where is the just a second. Now, read this. Audit risk. Now, what do you mean by audit risk? What are we studying? What do you mean by audit risk? Audit risk is a function of risk of material misstatement and the risk that the auditor will not detect such misstatements. What do you mean by this? See, what do you mean by risk of material misstatement? We always will be using this word, ROMM. That is nothing but risk of material misstatement. ROMM is nothing but risk of material misstatement. What do you mean by risk of material misstatement? Inherent risk into control risk. Now you understand the meaning of inherent risk. Inherent risk means there is no internal control. What do you mean by control risk? That means inherent internal controls are there, but it is not operating effectively and efficiently. Both together, both multiplied is called as risk of material misstatement. What it is called as? Risk of material misstatement. Now, risk of material misstatement multiplied by detection risk, that is auditor's risk, correct? That auditor is unable to identify the material misstatement due to fraud or error. So both this put together is called as audit risk. That means inherent risk into control risk into detection risk. All these together will give you audit risk. So what is audit risk? It is a function of risk, because they'll ask you for 1 mark. What is audit risk? Correct? It is a direct theory question. All these definitions, audit risk definition, inherent risk definition, control risk definition, detection risk definition, they can ask you. It will carry 1 mark. Correct? So you have to know the definitions. I explained you the meaning. Now we'll go through the definition once. But what is audit risk? Audit risk is a function of risk of material misstatement and the risk that the auditor will not detect such misstatements. Correct? Risk of material misstatements means inherent risk and control risk. Risk that the auditor will not detect such misstatements means detection risk. Very clear with this? Chat is a type of message. Put a message whether it's clear or not. And this is the base of audit. Clear? Yeah. So now, let us go with the definitions. Okay. Read out what is audit risk. See, whatever I'm putting in. 1 second. Yeah. So let's read together. So what is audit risk? It is the risk that an auditor expresses an inappropriate opinion. Be very careful, okay? We'll be learning opinions chapter in detail, but I'm telling you what is it here. What is it? Audit risk means it is the risk that an auditor expresses an inappropriate opinion when the financial statements is materially misstated due to fraud or error. Means auditor is giving an inappropriate opinion means wrong opinion. Auditor is giving a wrong opinion when the financial statements are actually materially misstated due to fraud or error. Since it's a revision batch, you already know what is unmodified opinion and modified opinion. Correct? Just tell me 2 words. Okay, I'll just write unmodified, I'll write modified. Tell me unmodified opinion is good or bad. Simple, I'm telling you in normal language. Unmodified opinion means it is a good opinion or a bad opinion. Chat. Type in. It's a good, correct? Unmodified means it is a good opinion. Modified opinions means it's a bad opinion. In normal layman language, I'm telling you. Okay. So, it is the risk that an auditor expresses an inappropriate opinion. Means it is telling that it is unmodified. Auditor is giving an unmodified opinion when the financial statements are actually materially misstated due to fraud or error. That this is audit risk. Correct? Auditor is telling everything is good, but in reality, the financial statements are actually materially misstated due to fraud or error. Now understanding what it is? Okay. Types of audit risk: inherent risk, control risk, detection risk. These meanings also you have to know. You have to know it by heart. Susceptibility. What is inherent risk? Susceptibility that an assertion can be materially misstated either individually or when aggregated with other misstatements when there is no related internal controls. We just understood this, right? No related internal controls. Now, what do you mean by susceptibility? Susceptibility is nothing but risk. What do you mean by susceptibility? It's nothing but risk. Let us understand what is assertion now. Let us understand what is assertion. I'll tell you assertion now. Let me explain you with an example. Okay. Now, assertion we are understanding. For example, this is a balance sheet. Okay. Here I have an in assets. This is assets, right? Normally it is statement form. Just for understanding purpose, I'm using this. Okay. Now, asset side. Under non-current assets. Correct? You have something called as tangible items. Under these tangible items, you have something called as one asset you take. For example, you take car. Okay. Car 5 lakhs. Okay. Now, as an auditor, okay, when you're seeing the financial statement, imagine this is a statement form. In that you're seeing under asset sides, there's one item under asset sides, under assets, non-current assets, under non-current assets, tangible items, under tangible items, you're seeing an item called as car, which is shown as 5 lakhs. Now, what does this represent? That means what all this, just by seeing this item, what all is coming to your mind? That means this car is owned by the company, correct? Only then it becomes a capital nature item. This car is in existence. Own means the company is having a right over it, correct? The car is in existence. This 5 lakhs valuation is correct. Correct. It is classified properly, means it is a capital nature item. Allocation is done properly. Correct. It is disclosed and present properly. So all these are represented. If only writing under assets, non-current assets, tangible items, car 5 lakhs, all this, just an item car lakh, when you see an item car 5 lakhs, all these are the representations. That means it is all it is included. It is inclusive that the car is the right is with the company. The car is in existence. The car is the valuation is done appropriately. Means appropriately the car is valued. The classification is done properly. It is allocated properly, and it is disclosed properly. Allocation means it is whether it's non-current assets or current assets, it is done properly. So this is called as assertion. This is called as assertion. Now come to the definition, and again I'll tell you with the above example. Assertions are representation by management. What are assertions? They'll not ask you the definition, what are assertions? But you have to know what are assertions, even for your interview and all. So what are assertions? Assertions are representations by management embodied in financial statements used by the auditor to form an opinion. Correct? So what are assertions? Assertions are representations by management embodied in financial statements used by the auditor to form an opinion. Now, representation by management means all these, whenever the management is written in balance sheet is prepared by management, right? So whenever management is writing this under assets, non-current assets, tangible items, car 5 lakhs. So all these are representations, right? Management is representing itself that this car is in existence. This car is owned by us. We are having the right over this car. This car is properly classified. That means it is a capital nature item. It is allocated properly. It is allocated means it is a non-current asset. Then it is valued properly. It is disclosed properly. All these. Correct? So these are assertions. Understood the meaning of assertions? Understood what are assertions? Very important. You have to know what it is. Not necessarily the definition, but you have to know the meaning at least. What these assertions? Any doubt till here? Okay. Now we are done with assertions. Now read the definition. Because everywhere you will see no assertion meaning will come. So susceptibility that an assertion can be materially misstated, either individually or when aggregated means put together, either individually or when aggregated with other misstatements where there are no related internal controls. That is inherent risk. Definition you should know. What do you mean by control risk? Risk that an assertion can be, same it is, risk that an assertion can be materially misstated, either individually or when aggregated with other misstatements, will not be prevented, detected, or corrected by the entity's internal control on a timely basis. Prevented, detected, corrected means it is not operating effectively, efficiently. Again, will not be prevented, detected, corrected means it is not preventing, detecting, corrected means it is not operating effectively and efficiently. That is control risk. Means internal control is present, but it is not operating effectively and efficiently. Next, what do you mean by detection risk? What do you mean by detection risk? Detection risk that the audit procedures performed by the auditor will not detect a material misstatement due to fraud or error. This is already we have discussed, right? So all the definitions are done. Audit risk, inherent risk, control risk, detection risk. Be very, like, you should know very thoroughly with this one. Especially, again, that I'll tell you. This one. Risk of material misstatement is nothing but inherent risk into control risk. Inherent risk into control risk into detection risk will give rise to audit risk. This perfect? Done? Okay. Now, see what is internal control. Just I've given the meaning. Policies and procedures in an organization which is designed by the management. Internal controls are always designed by the management to prevent, detect, and correct material misstatements due to fraud or error. Okay. Now, there are two types of assertions. This is a direct theory question. They can ask you. Okay. What are the two types of assertions? What are the two types of assertions? Account balance assertions and class of transaction assertions. Account balance assertions. What are account balance assertions? What are the three items? Assets, liabilities, equity. Account balance assertions means items of SOFP. SOFP means balance sheet items, statement of financial position items. Class of transaction assertions means SOPL items, that is transaction events, that is incomes and expenditures. Here we use the word transactions and events. Okay. So these are the assertions of account balances and these are the assertions of transactions. Now, existence. See, you have to write these. Whenever they ask no account balance assertions, two types of assertions, you have to write these. Only by writing existence, size and obligations, completeness, you will not get marks. You have to write the explanation for that. Okay, let us go quickly through this. Existence. What do you mean by existence? How do you verify existence assertion? Existence is an assertion, right? How do you verify the existence assertion? You just tell me. Chat box, quickly. How do you verify assertion, existence assertion? Yes. Physical verification, right? Physical verification, existence, simple, very good. Okay. So when I'm writing ALE is nothing but assets, liabilities, equity. Okay? Okay. So existence, you should not write only existence. You have to write the explanation, right? How will you write it? Assets, liability, and equity are existing. Exist. Rights and obligation. Rights and obligation means you are the owner. Correct? And obligation means you are obliged to pay. The entity holds the right to assets and liabilities are obligations of the entity. Next, completeness. Completeness means what? For example, the items to be capitalized till it is ready to use. All those items will be capitalized, right? The transportation expenses, the insurance expenses, all that will be capitalized, right? Not the insurance expenses. Insurance will be expensed off. The transportation expenses, the installation expenses, all those will be capitalized. So whether item is completed or not, whether it's completed or not. All that is called as completeness assertion. So assets, liabilities, and equity that okay, this is a technical word. You have to use that only. You have to write this format only. That is, that should have been recorded, have been recorded. Means जो होना चाहिए था वो हुआ है. Correct? Means जो कैपिटलाइज करना चाहिए था वो उन्होंने किया है. That is the meaning of completeness. You have to use this technical word itself to get marks. So what it is? Assets, liabilities, and equity that should have been recorded have been recorded. Okay, repeat. Why am I repeating? Because you have to learn it now, because it's a revision session. That should have been recorded have been recorded. Next, valuation, allocation, and accuracy. Assets, liabilities, and equity have been appropriately recorded. This is also a technical word. You have to use the word appropriately recorded. Appropriately. You should not use the word correctly. It is appropriately recorded. Allocation and accuracy means correct. Allocation matlab non-current assets, current assets. You have properly bifurcated or not. If it should come to current assets, you're shown it as current asset only. Non-current asset to non-current asset. That is called as allocation. Classification matlab, classification means capital nature item is properly classified under assets and revenue nature items are expensed off. That is classification. Okay. Okay, let's move on. So allocation means what I said, whether it is allocated properly or not between non-current assets and current assets. Classification means capital nature items and revenue nature items, whether it is properly done or not. Presentation related disclosures are relevant and understandable. Done. Now, class of transactions, SOPL items, that is transaction events. We use the word transactions and events. Here, wherever you use T&E, that is transactions and events. So, here instead of existence, we use the word occurrence. Correct? Can you use the word existence? In transaction events, in income and expenses, will I use the word income is in existence? No. Income, there is an occurrence. Occurred. It has occurred. Correct? So you have to use the word occurrence. All this will help you in that audit risk case scenarios. Okay? Understand the meaning perfectly now only. That's the reason I stressed and told you allocation and classification. Classification is classifying between capital and revenue. Allocation is classifying between non-current assets and current assets. All those loan and all is there, no? Current liabilities, non-current liabilities properly classified or not, all that. Okay. Occurrence. Transaction events that have been recorded have been occurred and pertain to the entity. Completeness, same. That should have been recorded, have been recorded. Accuracy. Transaction events have been appropriately recorded. Appropriately. Use these terms appropriately. Cutoff. What do you mean by cutoff? Year-end transactions. Correct? So transactions and events have been recorded in the correct accounting period. Classification. Transaction events have been recorded in the proper accounts. Same it is. Presentation related disclosures are relevant and understandable. So any doubt till audit risk? Any doubt? Shall we take a break of 5 minutes? Shall we take a break of 5 minutes? Okay. Any doubt? Are you getting the flow? The rhythm? Slowly we are building it, right? Okay. Let's continue at 5:55. 8 minutes break. Okay, 5:55. We'll start again at 5:55. Apart from the concept, if anyone have doubt regarding anything, you can text. You can put it on the chat box. Apart from the concept related doubt, because we have not yet done with the concepts. Concept related doubt will be sitting after the class. If any doubt. Apart from that, any doubt, you can text. Shall we continue? Is the audio video clear? Come back, come back. Okay. Now, this is the little theory part. We'll go a little quickly. Where concepts are involved, we'll spend a little more time in that. Correct? Okay. So, assurance engagement. Elements of assurance engagement, it is a direct theory question. Again, there are 5 elements of assurance engagement. 3-party relationship. What are three parties? Intended user. What do you mean by intended user? Shareholders, right? Stakeholders. Responsible party is management. And the practitioner is the auditor. Correct? So, so if you remember this, they can ask you what are the elements of assurance engagement. This is a direct theory question. So 3-party relationship, subject matter. What is the subject matter? Financial statements in our case. Correct? Next, suitable criteria. The subject matter is evaluated or measured against criteria in order to reach an opinion. True and fair view, applicable financial reporting framework. Correct? That is suitable criteria. Evidence. Sufficient appropriate audit evidence. Always we have to use the word sufficient appropriate audit evidence. Correct? It is a technical word. Needs to be gathered to support the required level of assurance. Correct? Next, report. Written report. So these are the 5 elements. In this, let us go a little quickly. Just a second. Okay. Different types of assurance engagement. This is also a direct theory question. External audit, review engagement, agreed upon procedures, and compilation engagement. What do you mean by external audit? Auditor provides a high but not absolute level of assurance. Correct? That is reasonable assurance. That is nothing but reasonable assurance. What is reasonable assurance? Auditor provides a high but not absolute level of assurance that the information audited is free of material misstatements. And external audit is always positively expressed. What it is? Positively expressed. What is review engagement? It is a limited level of assurance. External audit, absolute reasonable assurance. Here it is limited level of assurance. And it is negative assurance. It is negatively expressed. Correct? Review engagements is always negatively expressed. This definition you have to know. Very important. Negative assurance definition you have to know. Negative assurance is when an auditor gives an assurance that nothing has come to his or her attention which indicates that the financial statements have not been prepared according to financial reporting framework. Simple example I'll give you. What is negatively worded and what is positively worded? I say like, I like you. It is positively worded. I say I don't hate you. It is negatively worded, negatively expressed. Simple. Understanding the meaning of positively, negatively? Okay. So you have to learn this meaning, what I've put in red, no? You have to learn this meaning. Negative assurance, they'll ask you. Negative assurance is when an auditor gives an assurance that nothing has come to his or her attention, which indicates that the financial statements, तो सीधा भी बोल सकते थे ना हम लोग मतलब. But that will happen in external audit. In limited review, whenever we are doing limited assurance, limited procedures, that time we give negatively expressed assurance. Next, that is interim review of cash flow projections. They can ask you in MCQs, okay? Review of cash flow projections. Review engagement, इसमें negatively worded होना चाहिए, negative assurance होना चाहिए. If it is review of cash flow projections, objective में. Agreed upon procedures. What are agreed upon procedures? जो procedures बोलते हैं हम agree करते हैं with the management. In this assurance हम लोग we don't provide any assurance. There is no assurance is expressed. For example, fraud investigation, review of sales, etc. Compilation engagement क्या है? इसमें भी assurance engagement. We are not giving any assurance in this also. For example, preparation of consolidated financial statements, income tax return वगैरह file करना. All those are compilation engagements. assurance नहीं देते. So in these both you don't express any assurance. In these both you express, in this reasonable assurance, in this it is negative assurance. Simple हो गया, basic, clear. Next. Difference between interim and final audit. Simple मैं बताती हूँ, you can read it. Interim is nothing but about internal controls. ठीक है, test of controls, internal controls, understanding the entity and all. And final audit is सब हम procedures करेंगे. Third party confirmation, that is circularization, external confirmations, analytical procedures, subsequent events review, हम पढ़ने वाले हैं. Then agreeing the financial statements, substantive procedures, फिर made during the process this one, and performing test to ensure that the conclusions formed at the interim audit are still valid, obtaining written representations. So all this will be doing substantive, subsequent events, analytical procedures. ठीक है. Final audit में ज़्यादा we do complete audit. Interim audit it is just ऊपर वाला audit, majorly based on test internal controls. You're testing the internal controls. Okay. One more point I'll just clear with you. Clear. Okay. Remember, internal control. First, an auditor. कभी भी auditor क्या करता है? What auditor does? It always tests the internal controls first. Only based on internal controls. Internal controls का समझ में आ गया ना meaning, right? Or everyone understood what is internal controls? So the first thing what we do is we check the internal controls. If there are internal controls बराबर है, if it is working effectively, efficiently, then आप sample लोगे, ज़्यादा लोगे कि कम लोगे? If your internal controls are good, if the company's internal controls are good, it's strong, internal controls are strong, your sample size will be more or less? Less, correct? So first, why we are doing internal controls? To know what audit procedures to be performed. What is the nature of audit procedures to be performed? Correct? So that's the reason we do internal controls checking first. Okay, next. What do you mean by professional skepticism? Professional skepticism क्या होता है? It is they can ask you a definition, they can ask you professional skepticism. Professional skepticism is an attitude of questioning mind, being alert to conditions which may indicate possible material misstatements due to fraud or error, and critical assessment of audit evidence. हमेशा मतलब be alert, that is professional skepticism. Okay, to possible frauds or misstatements, that is professional skepticism. Questioning mind, ये क्यों, ऐसा क्यों, that is questioning mind. आपको इन्वेस्टिगेशन नहीं करना है, बट क्वेश्चनिंग माइंड रखना है, पोलाइट से क्यों क्या, इन्वेस्टिगेशन नहीं करना है. नेक्स्ट, प्रोफेशनल जजमेंट. व्हाट डू मीन बाय प्रोफेशनल जजमेंट? प्रोफेशनल जजमेंट क्या होता है, कैसे आता है प्रोफेशनल जजमेंट? कैसे आएगा? एक्सपीरियंस से, नॉलेज से, करेक्ट? प्रोफेशनल जजमेंट वैसे आता है. सो प्रोफेशनल जजमेंट इज द एप्लीकेशन ऑफ रेलेवेंट ट्रेनिंग, नॉलेज, एक्सपीरियंस इन मेकिंग appropriate decisions. Correct? Everything can't be fixed. You have to use your brains. That is professional judgment. Correct? वो कैसे आएगा? How will you be able to do all that? By experience, by training, by knowledge. That is professional judgment. Now, professional judgment is required in the following areas. Don't have to by heart anything, just have to know. Materiality, अभी materiality set करने में याद था, हमने पढ़ा था. We have studied, right? Professional judgment is required to set the materiality level. Audit risk, nature, timing, and extent of audit procedures. Correct? We do internal controls, and then based on internal controls, whether they are strong or weak, we decide the nature, timing, and extent of audit procedures. Nature matlab financial statements, which financial statements, what timing, kitna time, how much time will you take, extent, till what, that is which period, what, all that is called as nature, timing, and extent of audit procedures. Evaluating whether sufficient appropriate audit evidence has been obtained. ISA 500. ISA is International Standards on Auditing. Evaluating management's judgment. See, management judgment is only on 3 areas. Management's judgment. 3 areas. Accounting estimate, accounting policy, and going concern. Management's judgment applied only in 3 areas. Accounting estimate, accounting policy, going concern. Quickly tell me what is the difference between estimate and policy, accounting policy and accounting estimate. Example बोल दो, एक example of accounting estimate and accounting policy. Depreciation, very good. Depreciation is an accounting estimate. Accounting policy के लिए one example. Accounting estimate, depreciation, provision, all are accounting. Who wrote provision and depreciation is policy? गलत गलत गलत. ठीक है. Okay. Accounting estimate is depreciation, provision and all. Accounting policy is cost model, revaluation model, yeah, FIFO, yeah, weighted average, how you are valuing inventory, all that is accounting policies. Going concern will be studying a chapter. What is going concern? What is going concern? Going concern is that the company will go on forever. No. Going concern means the company will go on for a foreseeable future. Now, what do you mean by foreseeable future? Foreseeable future means for the next 12 months, the company will continue its business. That is going concern. Okay, simple. Going concern means for the next 12 months, the company will continue. Not for forever. Forever, no business is forever. Okay. Next, drawing conclusions, choosing analytical procedures will be studying. Analytical procedure मतलब ratios वगैरह याद रखो, ratios. Key audit matters, paragraphs, all that. Other significant matters communicated to TCWG, whether a deficiency in internal. Okay. Done with this. True and fair. Will you ever mention true and correct or true and fair? True and fair or true and correct? You can't tell true and correct. You have to always use the word true and fair. Means fair मतलब ठीक है. 90-95% of मतलब whatever you have chosen is best. Not correct. You can't tell 100%. Correct मतलब 100%. True and fair. True, factual, conforms with reality. Financial statements have been correctly extracted from the books and records. Conform with required standards. Fair, comply with the standard rules. Information must be free from discrimination and bias. Accounts should reflect the commercial substance of this one. No need to by heart anything. Just know it is never true and correct. It is always true and fair. Then let's move on. उस पर ज्यादा डिस्कशन अभी नहीं करना बिकॉज इट्स अ रिविजन बैच और इतना ऐसे वो क्वेश्चन नहीं आएगा ना उसके ऊपर सिर्फ इतना जानना ही है. ओके. Before starting subsequent events, let's go to opinion chapter first quickly. ठीक है. अरे यार ये तो बहुत स्लो चल रहा है. 1 minute. Going concern will be studying next after that. Written representation का है opinion chapter. Just a second. Let's discuss this first. Okay, quickly let's discuss this. Okay, opinion. There are two types of opinion. Correct? Unmodified opinion and modified opinion. Okay, unmodified opinion and modified opinion. Unmodified opinion simple याद रखना, it is a good opinion. Correct? Modified opinion मतलब याद रखना, it's a bad opinion. What is unmodified opinion? Financial statements are free from material misstatements due to fraud or error. मतलब सब बराबर है. What do you mean by modified opinion? Financial statements are materially misstated due to fraud or error. Auditor unable to obtain sufficient appropriate audit evidence. दो cases हो सकते हैं. Either materially misstated due to fraud or error or sufficient appropriate audit evidence unable to obtain. The auditor is unable to obtain sufficient appropriate audit evidence. Now, modified opinion are again classified into 3 types. That is qualified except for opinion, adverse opinion and disclaimer of opinion. What do you mean by qualified except for opinion? Misstatement is one thing again I'll have to clear. Unmodified opinion. Misstatement is immaterial, always unmodified opinion. Misstatement is there, but it is immaterial. It will go to unmodified opinion. Misstatement is there, and if it is material, it will fall under modified opinion. Getting it? Again, Always you have to check. If there is no misstatement, unmodified opinion. If there is misstatement, check materiality. Check materiality. If it is immaterial, unmodified opinion. Even though misstatement is there, if it is immaterial, unmodified opinion. Misstatement is there, material, modified opinion. Now we are classifying modified mein kaun sa? Which in modified? Qualified except for opinion means misstatement is material but not pervasive. We'll study what is pervasive. Pervasive means impact is huge. The effect is huge. If it is not huge, then qualified except for opinion. If misstatement is material and pervasive means impact is huge, then adverse opinion. Disclaimer of opinion. When disclaimer of opinion comes, only when there is no sufficient appropriate audit evidence. There should be, you're not, as an auditor, you're not able to obtain sufficient and appropriate audit evidence. Only then you can give disclaimer of opinion. And you have to check if the misstatement is material. If the misstatement is material and pervasive, then disclaimer of opinion. If the misstatement is material and not pervasive, then qualified except for opinion. Understanding? We have a summary for that also. Just a second. Okay. Now, okay, let us discuss with an examples. Now, listen very carefully, okay? We are going on with examples. Here we'll discuss even the materiality, what we studied, no? That also concept will come in this picture and this also will be there. Now, be with me. Management auditors. Okay. Okay. Assets, PP inventory. Now, management is telling PP is 10 lakhs, inventory is 1 lakh. When the auditor verified, when the auditor audited, he also is getting PP as 10 lakhs, inventory is 1 lakh. Is there any misstatement? Is there any misstatement? No. Is there any misstatement in inventory? No. I'm just telling you a small example, okay? So, which opinion will you give? Unmodified opinion, because there is no misstatement. Unmodified opinion means what? Financial statements show a true and fair view. Done. Simple example I gave you. Now, second example. Be very careful. Management is telling PP value is 10 lakhs. Auditor is also telling PP value is 10 lakhs. When he audited, he checked 10 lakhs. Is there misstatement? No. You can do lip movement. I can understand your lip movements. Okay. Inventory value, management is telling 1 lakh. The auditor is telling 95,000. Is there any misstatement? How much? 5,000. So which opinion will you give? Don't come to a conclusion so early. Misstatement is there, pause. Check the materiality level now. You came to this conclusion, there is misstatement, 5,000 misstatement. First question, the question will ask what is the opinion. Don't jump to conclusion. First ask yourself, what is it material? Material. How will you check the materiality? That what we studied now, materiality, like that way you have to check. Total assets you have to do. On total assets basis we are doing, because we have only the information about total assets now. In exam, they'll clearly tell you what it is. Or based on the question, we'll get to know what it is. On what basis you have to do. So what is the materiality level for total assets? The minimum level, what I told. 1%, it was 1 to 2% if you remember. It is 1%. So materiality level is equal to 1% of the total assets. And always total assets as per the management, okay? So total assets as per the management is 11 lakhs. So what will be the materiality level? What will be the materiality level? You should not calculate in terms, absolute terms, amounts. You should not calculate in amounts. You should calculate in amount, percentage. That how much is your misstatement according to the total assets. 5,000 is the misstatement, numerator. Divided by total assets is 11 lakhs, denominator, into 100. Okay. So take out your calculator and how much you get percentage. 5,000 upon 11 lakhs into 100. How much you got? How much are you getting? 0.45%. Am I right? So now, what was my materiality level? What I had set? It was 1% of total assets. How much misstatement am I getting? 0.45% of total assets. So is it material for me? No, it is not material. So if it is not material, which opinion? Unmodified opinion. Correct? Unmodified means good opinion. If it is not material, it is good opinion. Simple. Next, quickly. Question number 3. Management saying 10 lakhs. Auditor also saying 10 lakhs. Misstatement is, there is no, is there misstatement? No. Inventory 1 lakh. Auditor is selling 80,000. Is there misstatement? Yes. How much amount? 20,000 misstatement. Will you jump to the conclusion of opinion directly? No. Ask yourself first whether it is material or not. So calculate the materiality level now. Again, same on total assets, 1% of is our materiality level. So calculate how much is the misstatement in percentage. 20,000 divided by, yeah, divided by should have come. So 20,000 divided by 1 lakh into 100. How much is it? How much is it? 1.82%. Everyone got it? So our materiality level is 1%. Is it more than 1%? Yes. So is it material? Is it material? Yes. So if it is material means which opinion? Don't come to the final conclusion yet. Which opinion? You have to tell modified opinion. What you have to tell? Modified opinion. Then ask one more question. Is it pervasive or not? Pervasive means huge impact. Is it pervasive? 1.82% is it pervasive? Pervasive, is it a big impact? No. No. No means which opinion? Qualified except for opinion. What do you mean by qualified except for opinion? Financial statements show a true and fair view except for. Next question. Management auditor. Management is selling PP is 10 lakhs, auditor is selling 6 lakhs. Is there any misstatement? Yes. How much amount? 4 lakhs. Inventory 1 lakh, there is no misstatement, for example. So, will you jump to a conclusion? No. Ask about materiality. Is it material? Check. 4 lakhs divided by 11 lakhs into 100. That is how much? 36.36%. 36.36%. Now, is it material? Yes. Correct. Is it material? Yes. So, which opinion? Modified opinion. Ask one more question. Is it pervasive? In this case, it is a huge amount, right? 36.36%. So, is it pervasive? Yes. So, which opinion? Adverse opinion. Adverse opinion means financial statements do not show a true and fair view. Clear till here? Give me a thumbs up. Okay. On your videos, no, if you're comfortable, I can see if you're having any doubt or something. Okay. Now, summary. Let us come to the summary. Now, you understood the basics. Let us quickly go to the summary. How you have to decide in exam. Don't jump to conclusion directly. Go step by step. You will never go wrong. Correct? Opinion. Classify into two first. Whether it is a misstatement or it is no sufficient appropriate audit evidence. Okay? Whether it's a misstatement or it is no sufficient appropriate audit evidence. First, let us discuss about only misstatement. Then we'll discuss about this later. So now, if it is a misstatement, first question you have to ask. If it is a first I'm telling misstatement, there is no misstatement I'm telling. So which opinion? Very clear, unmodified opinion. Done. Next, misstatement. Yes, there is a misstatement. First question again, whether it is material. No, it is not material. Which opinion? Unmodified opinion. Revise along with me. Revise along with me. Misstatement. There is misstatement. Is it material? Yes, it is material. Which opinion? Modified opinion. First tell modified opinion. Always. Next. Modified opinion, you have come to that. Now, you have to check pervasiveness. You have to check the pervasiveness. Is it pervasive? What is pervasiveness? Effect of misstatement is huge. What is pervasiveness meaning in this? Effect of misstatement is huge. If the effect of misstatement is not huge, no. If it is not pervasive, which opinion? Qualified except for opinion. If it is pervasive, adverse opinion. Clear till here? Now, second part. I said, in opinion, two parts are there. So second part, no sufficient appropriate audit evidence. No sufficient appropriate audit evidence means you're not able to get the evidence only. Okay, in that case, you have to check whether it is material, whether that item where you wanted to get the evidence, whether it is material or not. If it is not material, No problem. Which opinion you will give? Unmodified opinion. Be very careful. Unmodified opinion means only where there is no misstatement, no. Misstatement also, but if it is not material, always unmodified opinion. If it is material, which opinion? Modified opinion. Again, ask one question. Pervasive or not? Correct? In this case, in no sufficient appropriate evidence, what do you mean by pervasiveness? No evidence for majority of items in the financial statements. Again, read this carefully. In no sufficient appropriate audit evidence, what do you mean by pervasiveness? Pervasive means no evidence for majority of items in the financial statements. Okay? If it is not pervasive, means which opinion? Qualified except for opinion. Don't give adverse opinion. If it is pervasive, give disclaimer of opinion. Very clear with this? Very clear? Now, some questions let us discuss again. No, before that, some note. Modified opinion. There will be basis for whatever opinion will be, no, qualified for modified opinion. We are talking about modified opinion. For modified opinion, there will be qualified, adverse, or disclaimer. So there will always be, for all those, you'll have basis for opinion paragraph, basis for adverse opinion paragraph, correct? Which will state the reason of such opinion. When you get that case scenario based question, no, you have to write this point, that this basis for opinion paragraph will be below the opinion paragraph. Okay. Unmodified opinion. What do you mean by unmodified opinion? Financial statements show a true and fair view. What do you mean by qualified except for opinion? Financial statements show true and fair view except for. Adverse opinion means financial statements do not show true and fair view. Adverse opinion. Disclaimer of opinion means we are unable to obtain sufficient appropriate audit evidence, so we are not expressing an opinion. Okay. Now let us go with some questions. Now tell me, if the entire records are lost due to the fire, which opinion? Entire records are lost. So first you tell me under which it will come. We studied two, right? Misstatement, no sufficient appropriate audit evidence. So this example falls into which? No sufficient appropriate audit evidence, right? Because entire records were lost due to fire. So in that, now if entire records are lost, is it material? Yes. Is it pervasive? Yes, because all the records are lost. So disclaimer of opinion. Understanding how we came to this conclusion of disclaimer of opinion? Next. Inventory lost due to fire. Only inventory was lost. Here entire records were lost. Only inventory was lost. So again, no sufficient appropriate audit evidence. Correct? In that, is it material? Inventory is the material item. Yes. So which opinion? Qualified except for opinion, not disclaimer of opinion. Because we studied the meaning of pervasiveness. Pervasiveness means majority of items of financial statement should be. Majority of items are not. Means for majority of items you didn't get the evidence. See this, virus attack. Destroyed 2 months wage records. Destroyed 2 months wage record. You didn't get evidence, right? Because they destroyed 2 months wage record. Is it pervasive? Is it pervasive? No, because 2 months wage record it is. Wage record. Qualified except for opinion. Now, next example. Be very careful. Virus attack, same. Destroyed 12 months wage records. Entire wage records was not there with us. Is there any evidence? That is no evidence part. Is it pervasive? Still it is not pervasive. Be very careful. Still it is not pervasive. Why? I'll tell you. Why? Why it is still not pervasive? Read the definition of pervasive again. What have I told? What do you mean by pervasive in? What do you mean by pervasive in? No sufficient appropriate audit evidence. Read along with me. No evidence for majority of items in the financial statements. Wage is just one item. So will you give your disclaimer of opinion? No. Majority of items, evidence you're not getting. Only then you'll give disclaimer of opinion. Understanding? Clear? Okay. So they'll confuse you like that. So they've given you, see, they'll give you two options. No, they'll give you 2 months wage record, they'll give you 12 months wage record. You will be attracted, you will be influenced. Okay, this is not pervasive, this is pervasive, this is qualified except for opinion, this is this one. Be very careful. If you remember in objective type question, if you get 2 marks, one question, they can give you some 2-3 sentences also, right? In this, if you mark one wrong, you lose entire 2 marks. There is no partial marking. You don't get 1 mark. Either you get 0 or you get 2. Correct? So be very careful. 2 months, 12 months, doesn't matter. Items matters. How many items? This is only one item, right? So it is not pervasive. Give qualified except for opinion. Next. An entity was not charging depreciation for so many years. If depreciation is charged, the accumulated profit will turn into accumulated loss. It's an exam question. Accumulated profit is turning into accumulated loss. So which opinion they're asking? First thing you'll ask, is there a misstatement? Yes, because they're not charging depreciation. Depreciation is mandatory, right? It is not optional. Depreciation you have to charge. Is it material? Yes, depreciation is material. So which opinion? Modified opinion. Pervasive. Is it pervasive? Yes, because accumulated profit is turning into accumulated losses. So which opinion? Adverse opinion. Remember, it is misstatement wala case, not the no sufficient appropriate audit evidence. Don't give disclaimer and all. It is misstatement wala case. So done with audit opinion? No. Okay. Whenever they give you in section B, impact on audit opinion, impact on audit report, they'll give you for 4 or 5 marks, right? How will you have to present your answer? This is the structure of presenting your answer. Every point has 0.5 marks allotted. That is how you will get your marks for that opinion paragraph. If it is applicable, you have to put that points. First is you'll write which opinion. Okay. Unmodified opinion or modified opinion. You have to specify first. You don't have to directly jump into disclaimer and all. You have to specify unmodified or modified. That will carry 0.5 marks. Then, if modified opinion, state it. Qualified except for or adverse or disclaimer. So people directly jump into this. So it is only 0.5 marks. You have to even write modified opinion always. Next, technical reason you have to give. If it is unmodified opinion, you have to give financial statements are free from material misstatements due to fraud or error. If it is qualified except for opinion, give misstatements is material but not pervasive. Write those words. Adverse, if it is adverse, you don't have to write all 4, okay? Whichever is your opinion, based on that, you have to write that point. Okay, na? Okay. Disclaimer of opinion, misstatement is material and pervasive. Next, prove materiality. You have to prove it. We did that, right? We proved materiality 1%. In percentage form, you have to always prove. Then you have to make opinion paragraph. If they give you that audit report partner, you have to make that opinion paragraph. Unmodified opinion, whichever opinion, for example, your answer was adverse opinion. So you have to write financial statements do not show true and fair view. Here, whatever you're writing, misstatement is material and pervasive. That's the reason you gave this opinion. Here you're writing in opinion paragraph, financial statements do not show true and fair view. Understanding difference? For disclaimer of opinion, what it will be? We were unable to obtain sufficient appropriate audit evidence, hence we are not expressing an opinion. These sentences should be there. Basis for qualified except for, basis for adverse opinion, basis for this. I said, basis paragraph you have to write. And that also you have to, this also you have to show that it will be shown below the opinion paragraph. If you write this word below opinion paragraph, there will be a paragraph called as basis for qualified except for opinion, whichever is your opinion. Then state the reason for modified opinion in the above paragraph. Done. State first that there is something called as basis for opinion, and then that will be shown below the opinion paragraph, and then write the reason for modified opinion in the above paragraph. Understanding the marks, how the examiner gives. We are done with opinion chapter. Any doubt till here? Okay. Now let's quickly go to subsequent events and going concern. Let us discuss these both chapters now. Okay. Subsequent events and going concern. Okay. Okay. Subsequent events. ISA 560. Events occurring after the reporting date. After the reporting date, but before the audit report date. After the audit report date, after the reporting date, but before the audit report date. Plus facts that these were events. Okay, here facts that auditor became aware after the audit report date. Both including will become your subsequent events. Again, after the reporting date, but before the audit report date, plus facts that came that the auditor was aware after the audit report date. First, we are discussing about this part now. Okay, events occurring after reporting date. Events occurring after reporting date, but before audit report date. Be very careful. Now, treatment as per IAS 10. This is your FR part. Be very careful. Listen. Adjusting event, non-adjusting event. Adjusting event. We'll study what is adjusting, what is non-adjusting. But now I'm giving you a summary how you will frame your opinion first. If it is an adjusting event, you have to adjust in financial statements, correct? You have to make changes in your financial statements. If it is a non-adjusting event, you will see if it is material, then disclose in the notes to financial statements. If it is an adjusting event, you have to adjust in the financial statements. If you have adjusted in the financial statements, if the organization has adjusted in the financial statements, which opinion? Unmodified opinion. Good opinion you'll give, because adjusting event was there, they have adjusted also. No problem. Next. If adjusting event was there and you have not adjusted in the financial statements, then first question again, check the materiality. Check the materiality. If it is not material, again, unmodified opinion. If it is material, then modified opinion. You'll check about the pervasiveness. Usually I'm telling in subsequent events, it will always be qualified except for opinion only. Okay. Always it will be qualified except for opinion only. In a very rare situation, it will be adverse opinion. Okay. So remember in subsequent events, in adjusting events, if adjustment is not done and if it is material, always which opinion you will issue? You will issue qualified except for opinion. Okay. Next. Done with adjusting events. Non-adjusting events. First, you have to check whether it is material. If it is material, disclose in the notes to financial statements. Now check whether have you disclosed in the notes to financial statements or not. Whether if they've disclosed in the notes to financial statements, then no problem. Give unmodified opinion. If they've not disclosed in the notes to financial statements, then give modified opinion. Again, same. In modified opinion, again, it will be qualified except for opinion, not adverse opinion. Okay. Usually we'll check, no, that procedure is like that only, no, materiality and then modified opinion, then pervasiveness. But here you don't have to check this. It will mostly be qualified except for opinion only. So remember this. Next. Second part. First part we studied, right? After the reporting date, but before the audit report date. Now we are studying facts that auditor became aware after audit report date. After the audit report date. Between part we just studied. Now after the audit report date, if the facts, the auditor, if some facts auditor comes to know about it. First thing always remember, after audit report, after you issue audit report, you don't have to do any procedures. You don't have to do any audit procedures or no audit procedures required. Be very careful with this. After the audit report date, no audit procedures required. What will you do? See, after the audit report date, read this. After the audit report date, but before issue of financial statements to the shareholders, not yet given that audit report to the shareholders, what will happen? Oh, 1 minute. Okay. But before the issue of financial statements, okay. So, but before the issue of financial statements to the shareholders, discuss with management whether financial statements need to be amended. When after the audit report date, but before they're issued to the financial state to the shareholders, first thing you have to discuss with the management whether the financial statements need to be amended. Is it required? Amendment is required or not? If amendment is required, then if amendment is required and the management has amended it again, If amendment is required, first what you will do, you will discuss with the management if any amendment is required. The facts what you got to know about the audit after the audit report date, but before the issuance to the shareholders. First, you have to check whether amendment is required. You'll ask them. You'll discuss with the management. After discussing, you got to know that amendment is required. And amendment is required and they've amended it. Whether amendment is done or not. If they have done it, then as an auditor, what you will do? You will do subsequent events review. You will just review it. Okay, because I already discussed, after audit report, you don't have to do any audit procedures. So you'll only review it. So subsequent events review you will do. And after that, you'll issue a new report with emphasis of matter paragraph because you have not yet given to the shareholders. Emphasis of matter paragraph you have to include in that. Now, amendment was required and it is not amended or it is not adjusted in the financial statements. If it is not done by the management, then next question you have to ask whether audit. First, next question you have to ask to yourself is that audit report issued to the management or not. One is audit report is ready with us. We have signed it, but not yet issued to the management. If it is not yet issued to the management, if it is not yet issued to a management, then change your opinion, issue a modified opinion, because your audit report is ready, you have signed it, but you have not yet issued to the management. First, it is issued to the management and then shareholders will get it, correct? So if it is not yet issued to the management, then issue a modified opinion, change your opinion. If audit report issued to the management, if audit report is issued to the management, if it is issued, yes, then take action to prevent reliance on financial statements. Then you have to, as an auditor, you have to take action to prevent reliance on the financial statements so that people don't rely on that financial statements. Next, second part of that, after the audit report date and after the issue of financial statements to the shareholders, everything is done now. Sab ho gaya. In that case, what you'll do? Ask TCWG to inform shareholders. We'll ask the TCWG, or shareholders, please inform to the shareholders. TCWG inform to the shareholders. If TCWG informed to the shareholders, TCWG has done its work. It has informed to the shareholders that that event has come and this is important. If yes, then issue a new audit report. I will issue a new audit report if TCWG has informed the shareholders. If TCWG has not informed the shareholders, then take action to prevent reliance on financial statements. The last resort to an auditor is take action to prevent reliance on financial statements. Clear till here? Any doubt? I hope it's clear. Give a thumbs up. Okay. Next. Now the same thing what I've explained, no, it is in the written format. So when I give you the notes, you just read it, okay? I'm not reading it now. The same thing what I've explained you in charts, now it is in a written format. Okay? These questions you go through it. Everything same only it is, just written format it is. If you understand the chart well, you can easily frame these sentences. Next, now we learn what are adjusting events and what are non-adjusting events. Cheers. Understanding? Able to connect? Since it's a revision lecture, at least I hope it's benefiting you some or the other way, at least. Okay. Okay, now very important part. Now we are studying not audit part, okay? We are studying the adjusting events, non-adjusting events part. Events occurring after the reporting date. So this will carry 1 mark. The definitions of adjusting event and non-adjusting event will carry 1 mark in your exam. Be very, I'm telling you the pattern, exam marking scheme also. So adjusting event will carry 1 mark. You have to write this definition. Those events which provide evidence on conditions existing at reporting date provides evidence. Non-adjusting events are what? Those events that do not provide evidence on conditions existing at reporting date. means that event should be existing at the reporting date and it provides some evidence. Then it is an adjusting event. Non-adjusting events does not provide evidence. You have to write this definition, you will get 1 mark. It carries 1 mark. Now, we'll be discussing 8 adjusting, non-adjusting examples, okay, based from exam questions. Now, receivable becoming insolvent. Receivable becoming insolvent. It is an adjusting event. Right of receivable, recognize allowance for irrecoverable debt. Now, let us understand with an example, okay? Example 1. Focus on example 1. Okay. December 31st, 2020 is my reporting date. It is my reporting date. Example SBI Bank. Okay. It had a receivable. It had a receivable in its asset side, $9,000 million. For example, Vijay Mallya. On Jan 15, 2021, after the reporting date, Jan 31st was your audit report date. Before your audit report date, but after your reporting date, one event took place. That is, receivable became insolvent. If the receivable became insolvent, then the asset value became 0. Correct? So this is an adjusting event, and you have to adjust in the financial statements by writing off receivable and recognize allowance for irrecoverable debt. Second, during post-year-end physical verification count of inventory, it was found that year-end, be very careful, year-end inventory was damaged. It will be an adjusting event, write off inventory. Quickly, let us go through an example. December 31st, reporting date, inventory valued was 5 lakhs. Jan 3rd, Jan 15th was the audit report date. So before that, on Jan 3rd, physical verification took place, inventory was damaged. You found some inventory was damaged. Either the value of the inventory was 0 or, for example, take 1 lakh. Okay. Okay. So now just take this one example, first example. Okay. So in this, inventory was there or the reporting date was existing, right? But after the reporting date, but before the audit report date, it got damaged. So it is an adjusting event because it was year-end inventory. It was the same inventory, year-end inventory. Now see the next example. Same December 31st, Jan 5th. Okay. On Jan 5th, something happened. And this time the inventory is milk. It is milk whose shelf life is only 3 days. And when did you do physical verification? You did it on Jan 5th. You had done the physical verification of the inventory and you found that the inventory is damaged. Now, in this case, is it an adjusting event? No. Why? Why is it not an adjusting event? Because it is not year-end inventory. It is not an adjusting event because inventory was not year-end inventory. That milk, it is after 3rd January, is it sustainable? No, it would already, either the company should have been thrown off or sold it out. Correct? Because it's already gone. So the physical verification, when you got to know about that inventory which was damaged, correct? It is not that year-end inventory. It is the inventory which is of the next year, not the year-end inventory. That's the reason it is a non-adjusting event. Next. December 31st, 2021. First question. Inventory is valued at cost or NRV, whichever is lower, right? Inventory is valued at cost or NRV, whichever is lower. Am I right? Yeah. So, see the example very carefully here. Okay, first let us read what it is. Let us read what it is. Third one. Read this. Post year-end selling price of inventory is below year-end carrying amount. What is it? Post year-end selling price of the inventory is below year-end carrying amount. It is an adjusting event, right of inventory. I know you didn't understand. Let us understand with an example now. Third example. Look into the third example. December 31st reporting date. Cost of the inventory is 5 lakhs. NRV is 8 lakhs. So which value you value the inventory at what? 5 lakhs, whichever is lower, that is 5 lakhs. Correct? Jan 31st was your audit report date. Before this, that is on Jan 15th, inventory was sold. And that inventory you sold it at rupees 4 lakhs. Correct? Now, what is NRV? Net realizable value is nothing but estimated selling cost. When after the reporting date, but before the audit report date, when you got to know that the selling price was 4 lakhs and that inventory was existing at the balance sheet date, and you had estimated that the value was 8 lakhs, which was actually how much? 4 lakhs. So now actually you should have compared 5 lakhs and 4 lakhs, correct? So how much it would have been? Instead of 5 lakhs, you should have shown actually 4 lakhs. Correct? Correct? So this is an adjusting event because your selling price is below your carrying amount, year-end inventory ka carrying amount. Now, it's an adjusting event because changes required. Now, listen to the next example. December 31st reporting date, December 31st audit report date, and before, in between this date, one event is happening, that is inventory of selling it. Same example, 5 lakhs, 8 lakhs, 5 lakhs. But now in this case, after the reporting date, you're selling the inventory at 10 lakhs. So when you go and check 5 lakhs or 10 lakhs, whichever is lower, answer is what? 5 lakhs itself, right? So do you have to go and change it? No. So is it an adjusting event? No, because no changes is required. Now, in this, the selling price is more than the carrying amount. Carrying amount of inventory is 5 lakhs. Here the selling price was 4 lakhs and the carrying amount was 5 lakhs. Now read the point again. Post year-end selling price of inventory is below year-end carrying amount, adjusting event right of inventory. Next, permanent diminution in the value of an asset, adjusting event right of asset. For example, purchase the land. I'd purchased the land thinking that nearby airport will be built, or near to that land airport will be built, or on that land only, imagine. So the land value was $100 million at that time on the reporting date. Before the audit report date, on Jan 15th, the government announced that near that land or on that land, waste treatment plant will happen. That area, waste treatment plant will happen. So now that land valued at now only $1 million, a huge reduction. So is it a permanent diminution or temporary diminution? It's a permanent diminution, right? Because now if they decided waste treatment plant, now that land value will never increase. Correct? So it has become 100 million only. It will become only 1 million only. So it is an adjusting event, then you have to adjust in the financial statements. One more example. You have invested in the shares of a company. That time the share price of that company was $85 per share. The total value was $85 lakh. Now, before the audit report date, the company in which you had invested shares, no, that company became insolvent. The company in which you had invested shares, that company became insolvent. And now the price of that company share fell down to 0.19 per share instead of $85. So the value became 19,000. So is it an adjusting event? Yes, it is an adjusting event because there is a permanent decrease. Take the same example, the value of shares became only 70,000. For example, normally you do investing, right? So there is a risk in the market that it will go up and down. So when your investment goes down, will it become an adjusting event? No, because there is a temporary decrease. It might go up again. So you will not go and make any changes. Only when there is permanent increase or decrease, only when there is a permanent decrease, only then it is an adjusting event. Understood? Next. Fraud discovered after year end relating to a year end asset. Adjusting event right of inventory. Now, December 31st, reporting date. Receivable, cash, inventory, any of the asset you take, that was misappropriated. And this it was misappropriated, but we didn't know about it at the reporting date. The value was 3 lakhs. After the reporting date, but before the audit report date, on 2nd January, you got to know, you discovered this fraud, that this fraud had happened. So the value of that asset became 0. So is it an adjusting event? Yes. Next, one small concept I want to explain. Quickly listen. Legal case. Okay. Legal case. Probable outflow and possible outflow. Do you know these words? You have to know it. What is probable outflow and what is possible outflow, possible obligation or probable obligation? What do you mean by that? Probable means more than 50% chance of paying the penalty. Possible obligation means less than 50% chance of paying the penalty. Means in this, you're going to lose the case. LOSE, lose the case. In this, you're going to win. Again, be very careful. Legal cases, possible obligation, probable obligation. Possible obligation means you're going to win the case. There will be less than 50% chance of paying the penalty, and you have to just show it as a contingent liability. Just disclose it as a contingent liability. But in probable obligation, since you're going to lose the case, there is more than 50% chance of paying the penalty. And in this case, you have to record a provision. You have to record a provision entry you have to pass. That will affect your balance sheet and P&L account. Provision entry is nothing but expense account debit to provision account. Correct? Possible obligation only show as a disclosure as a contingent liability. Okay. Now, who will tell you about all this? The lawyer will tell you. The advocate will tell you about all that. Now, let's discuss this. Legal case. On December 31st, you have disclosed it as contingent liability notes to financial statement. Okay, you thought you will win the case. Before the audit report date on Jan 5th, for example, the lawyer informed that the case will be lost. That is probable outflow. That time you have to go and change. Now, instead of contingent liability, you have to record a provision. So it is an adjusting event. Last, insurance receivable. On December 31st, there was insurance, means some fire accident, something happened, but the insurance claim was not yet approved. So you had recorded as 0. Insurance claim you didn't record only. But before the audit report date, one date, insurance company approved the claim. Now, once the insurance claim was approved, it becomes an adjusting event, and again on the reporting date, you have to go and show as insurance receivable 1 lakh. Done. So these were adjusting, non-adjusting event. So done with subsequent events. Let's take a 5 minutes break. 7 o'clock we shall resume. We shall resume at 7 o'clock. Okay, welcome back. Everyone come back. Okay. Now we'll be starting with ISA 570, that is going concern. Okay. Going concern, meaning of going concern. They'll not ask you all this. Whichever is in blue, they'll not ask you. Whichever is in orange, they'll ask you. Going concern assumption is a fundamental principle. Foreseeable future means for the next 12 months. If the going concern basis is not, this is very important point. If the going concern basis is not appropriate, if it is not appropriate, the financial statements should be prepared using breakup basis, that is liquidation basis or NRV basis, correct? So whenever the going concern assumption is not appropriate, you have to change the financial statements. Instead of normal, you have to make it as a under liquidation basis. What do you mean by liquidation basis? Assets value should be stated as the realizable value. Non-current assets will be classified as current assets and non-current liabilities will be classified as the current liabilities. Now, auditor's responsibilities or objectives related to going concern. Objective type question they can ask you. What is the auditor's responsibility? Two responsibilities. To obtain sufficient appropriate audit evidence regarding the appropriateness. What is it? Everyone use this word, appropriateness of management's use of the going concern assumption. Who will tell the auditor whether the going concern assumption is appropriate or not? The management will tell, right? And as the management will tell that the going concern assumption is valid. But the auditor will check. We have to obtain sufficient appropriate audit evidence that whatever the management is telling, is it appropriate or not? So regarding the appropriateness of management's use of the going concern assumption. To conclude whether a material uncertainty exists related to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. Now, what do you mean by material uncertainty exists? Means, as long as the company is having funding, support, funds, support, government support, anything you take, only then the company is ready. For example, company is having huge losses, okay? But still it has a lot of funds. It has some supports. It has investors. Still it will be a going concern, but there will be material uncertainty. Understanding what it means? Again, for example, a company is in huge losses, okay? But it has enough of capital. For the next 12 months, it has enough of capital, it can still run the business. We will not call that company as going concern is not appropriate. Understanding? Still going concern assumption is appropriate, but what we will tell that there is material uncertainty exists. So two things: to obtain sufficient appropriate audit evidence regarding the appropriateness of management use of the going concern assumption, and to conclude whether a material uncertainty exists related to the events or conditions that may cast significant doubt. Material uncertainty means it will cast significant doubt on the entity's ability to continue as a going concern. Understanding? Next, what are the indicators? See, indicators you have to just know. You don't have to know that there are three types of indicators: financial, operating, other indicators also. You don't have to know which point will come under which indicator also. You just have to know that is it an indicator of going concern or not. That's it. You don't even have to know under which financial indicator or what it is. You don't have to know all that. You have to just know whether it is an indicator or not. Just quickly, let's go through it. Okay. Indicators of going concern: substantial operating losses, deterioration in the value of the assets used to generate cash flows, negative operating cash flows, adverse key financial ratio means negative key financial ratios, net liability or net current liability. Normally, you will get net assets, right? That is, assets should be more than your liabilities. If your liabilities are more than your assets, then it is a indicator of going concern. Assumption being inappropriate. Fixed term borrowings approaching maturity without realistic prospects of renewal or repayment. Means it is your loans are approaching maturity, but you don't have enough funds for repayment, or you're not able to get any new loan. You're not able to renew it. Indications of withdrawal of financial support by creditors. Creditors are telling, we will not be giving you more. We will not be giving you credit basis. Means they're not giving us payment. The creditors of our creditors, they're not giving us. Indicators of withdrawals of financial support by creditors means they are not giving us credit. No more credits they are allowing us. If they are not giving us, see this point. Change from credit to cash on delivery transaction with suppliers. Now, if you have to do business, you require goods, right? What you're doing, you're purchasing goods from the suppliers and you'll sell it. Now you were purchasing goods from the suppliers on credit basis. Now the suppliers are telling we will not give you goods on credit basis. If you give us cash, only then we'll give you goods. Now, if the suppliers are not ready to give you goods, how will you sell? How will you run the business? So that is also an indicator. Change from credit to cash on delivery. Inability to pay creditors on due dates. Arrears or discontinuance of dividends. Inability to comply with the terms of loan agreements. If you're not complying with loan agreements, terms of loan agreements, they will make the payment immediately, right? They tell us to make the payment immediately. Inability to obtain financing for essential new product development or other essential investments. You have to keep on upgrading your products, right? Operating indicators. Management intentions to liquidate or cease operations, to stop the operations. Loss of key management without replacement. There is no CEO, CFO, and there is no replacement also. It is also an indicator. Loss of major market, key customers, license or principal suppliers. Labor difficulties, shortages of important supplies, the raw materials. If there is shortage, how will you manufacture? If you're not able to manufacture, how will you sell? How will you run your business? Emergence of a highly successful competitor. For example, when Jio came into the market, there's a problem for Idea, Vodafone, and all, right? So whenever there is highly successful competitor, there is an impact on going concern. Other indicators: non-compliance with capital or other statutory requirements, pending legal or regulatory proceedings, changes in laws, uninsured or underinsured. So all these are the indicators. Okay, just go through it and just understand. No need to by heart anything. Now, very important direct theory question. Audit procedures related to going concern. Okay, you have to write these points. Review management's going concern assumption is appropriate. Already we studied this, right? To review the management's going concern assumption, whether it's appropriate or not, whether whatever they're telling it's correct or not. You have to use these words, technical words. Assumption is appropriate. Whatever I've highlighted, no, you have to use those words. Obtain written representation from management whether going concern assumption is appropriate. Analyze and discuss cash flow, profit, and other relevant forecast with the management. You discuss, okay, how are you coming to a conclusion that your business is going concern? They would have made some forecast, right? Some cash inflows and all. So all that you have to analyze and discuss with the management. Analyze and discuss the entity's latest available interim financial statements or management accounts. When you're doing audit, if in between there is some interim audit, interim financial audit, you can check that. Till now, how much revenue is made, how much cash, how much assets are there, how much liability is there, how much losses are made. Based on that also, we'll get to know whether going concern assumption is appropriate or not. Read minutes of the meetings. Perform sensitivity analysis. Means sensitivity analysis on cash flow means what will be the effect of cash changes. How cash can affect your going concern. Now, very important, audit opinion related to going concern. Already we studied about audit opinions, right? The same thing now. Now, everyone focus. If going concern assumption is appropriate, if whatever the management is said and if it is appropriate, which opinion will you give? Unmodified opinion. Correct? There is no problem. Going concern assumption is appropriate. Going concern assumption is not appropriate. Means the management is telling that the going concern assumption is appropriate, but when the management is telling the company is going concern, but when you did it, you found out that the going concern assumption, whatever the management said, it is not appropriate. Then which opinion will you give? You will give adverse opinion. Why will you give adverse opinion? Because it is pervasive, right? If the going concern is a pervasive item, it is a major effect. So it's an adverse opinion. Going concern assumption is appropriate. It is appropriate, but material uncertainty exists. What happens? It is appropriate, but only the company is running because of some support, because of some funds and all. It is not because of their operating activities. That is, material uncertainty exists. Then disclosed in the notes to financial statements or not. What we have to check? Whether they have disclosed in the notes to financial statements or not. If they have disclosed, Then unmodified opinion, plus, plus, plus. You have to even show in your which paragraph? Material uncertainty related to going concern paragraph. Be very careful. In that paragraph also you have to mention. If you have not disclosed in the notes to financial statements, then you will give a modified opinion. And modified means which one you will give? Qualified except for opinion, because it was just disclosing part, right? It is not a pervasive effect. Here, the assumption also is not, the assumption only is not appropriate. That time you will give adverse opinion. Here, only disclosure. Material uncertainty exists. So, qualified except for opinion, since they have not disclosed it. Next, entity does not assess going concern. Entity is not assessing going concern. It is their responsibility, right, to assess the going concern assumption or assess going concern for less than 12 months. Going concern should be assessed for 12 months or above. In that case, since management has not assessed, no sufficient appropriate audit evidence, the second part, not the misstatement part, the second part, no sufficient appropriate audit evidence. So which opinion in this? Based on the pervasiveness, you will give qualified except for or disclaimer of opinion. Understanding till here? Okay. Questions? Two questions. Listen, okay, very carefully. Listen very carefully. Entity is not a going concern. Entity is not a going concern. Management has prepared financial statements under liquidation basis. Did the entity do right? Yes. So which opinion? Unmodified opinion. No problem at all. Next question. Entity is not a going concern. Entity is not a going concern. Management has prepared financial statements under normal basis, but will disclose it is not a going concern in notes to financial statements. Did the entity do right? If the entity is not a going concern, it is mandatory to prepare financial statements as per liquidation basis. But what the management is doing, the management is chalak. What is doing? It is telling we will prepare financial statements as per normal basis only, but we will give a disclosure that going concern assumption is not, that it is not a going concern. Is it right? No. The financial statement should be prepared as per the liquidation basis, correct? So which opinion you will be giving? Adverse opinion, because there is a pervasiveness, right? Whenever going concern is there is a pervasiveness. Whenever the financial statement should be changed, no, it is a pervasive effect. So you will give adverse opinion. Understanding this? Okay. Next, let us go 580. ISA 580, written representations. What are written representations? Written statements by management provided to the auditor. Why? To confirm certain matters or to support other audit evidence. Correct? Is written representation primary evidence? No, it is not a primary evidence. It is only a secondary evidence. It is only to support other audit evidences. See, only in two situations, written representations can be primary evidence. Only in two situations. Which are the two situations? To confirm oral representation and to confirm management judgment. Whichever are written in blue, just have to understand, okay? Only in orange, whatever written, you have to learn it. See, I already explained management judgment only on three cases. Accounting estimate, accounting policy, going concern. Remembering? Estimate was what? Depreciation, provision, examples. Accounting policy means what? Cost, revaluation model and all. And cost, evaluation model, FIFO, weighted average, all those are examples of accounting policy. Now, very important question. Contents of written representation. What are the contents of written representations? Written representations are necessary in three areas. Confirm managerial responsibilities required by other ISAs and support other audit evidence. They'll ask you what are the contents of written representation as a direct theory question. You have to write this. Confirm managerial responsibilities. Very easy. Preparation and fair presentation of financial statements is the responsibility of management. Management has provided the auditor with all the relevant information. The same thing what we studied, right? The same thing we have to write in written format. All transactions have been recorded and reflected in the financial statements. So written representation means we are telling this management, these are all your responsibilities, kindly confirm. Required by other ISAs. Selection and application of accounting policies are appropriate. Whatever policies they have done, no, this is a technical word. Again, this is a technical term. You have to use this word only. Accounting policies are appropriate. You have to use the word accounting policies are appropriate. accounting estimates are reasonable. You can't interchange these words, appropriate and reasonable. Again, repeat along with me. Accounting policies are appropriate. Accounting estimates are reasonable. Use these words. These are technical terms. Okay. Aspects of laws and regulations, including non-compliance. Management has disclosed all information in relation to fraud or suspected fraud. All subsequent events requiring adjustments or disclosures have been adjusted or all this were taken in writing. That's it, nothing else. These are the contents of written representations. All deficiencies in internal control that management is aware have been communicated to the auditor. Effect of uncorrected misstatements is immaterial. Uncorrected misstatements means we found out misstatements. The company, the management has to correct it, but the management has not corrected it. So that is called as uncorrected misstatements. And if uncorrected statement is immaterial, that's the reason they have not corrected it. So it is okay. That written representation they have to give. Next, notes. Very important. Date of written representation letter must be near as practical to, but not after the date of auditor's report. So when should be the date of written representation? Near to the auditor's report, not after the auditor's report, correct? Near to, not very before also. Near to the auditor's report. They'll ask you, if you've solved some objective type question, you would have come across this. So not after the date of the auditor's report, but practical to near. It should be near to the auditor's report. If written representations are inconsistent, means what the management has written and told us that this is what, and when we are auditing, we are getting something else. That is called inconsistency. If written representations are inconsistent with other audit evidence, auditor shall perform additional audit procedures. If inconsistency still persists, so when we did first time, it was inconsistent. We performed some other additional procedures. In spite of other additional procedures, still it is inconsistent. Still, if that inconsistency persists, the auditor shall reconsider the integrity, the honesty of the management and withdraw from the engagement if legally permitted. You have to reconsider about the honesty of the management, because it is writing and giving wrong things to us, correct? And we have to withdraw from the engagement if legally permitted. If management does not provide written representation, discuss the matter with TCWG, because written representation is compulsory. We have to get written representation. If they are not giving us, if the management is not giving us, discuss with TCWG, determine the impact on the auditor's report, qualified except for opinion. Remember, if management is not giving written representation, you can't withdraw from the engagement. You have to discuss with TCWG and give an impact on the auditor's report that qualified except for opinion. Okay. This was written representation. Now, using the work of internal audit, let us study. Using the work of internal audit, only one direct theory question. Factors to be considered while evaluating the work of internal audit. Can the auditor use the work of internal audit? Yes, but you have to check on some factors. Factors you have to consider before taking their work, before relying on internal audit's work. Objectivity of the function. What do you mean by objectivity of the function? To whom does the internal auditor report? Now, if the internal auditor, listen very carefully, if the internal auditor is reporting to the management, now, internal auditor is appointed by whom? Management. Internal auditor is appointed by management. External auditor, that is the external auditor is appointed by the shareholders in the AGM. Okay. Now, internal auditor, when it is appointed by the management and he is reporting also to the management only. One thing. Second example is internal auditor is appointed by the management, but it is reporting to TCWG. Now, in which reliance will be more? When internal auditor is reporting to the management or TCWG? Answer type 1 or 2. 1 or 2. Management or TCWG? Management or TCWG? Management or TCWG? 2, correct? Yes. Because now the internal auditor will be secured, right? That okay, when I'm reporting to TCWG, the management will not have power. That okay, management will not think okay that I am appointing and he is telling me only that this is wrong and all. Little you will be hesitant, right, to tell all that. But when someone else is appointing and you're reporting to the higher authority, you can easily communicate, okay, this is wrong, this is wrong, this is what it is. Correct? So that objectivity of the function you have to consider. That is a factor. To whom does your internal auditor report? When, as an external auditor, when you're taking the work of the internal auditor, you have to check to whom is he reporting. Because if he is reporting to the management, he will not report everything. Correct? No? He will be hesitant. But when he's reporting to TCWG, he is open to it. Technical competence of internal auditor, whether he is competent enough or not, whether he is having proper knowledge, whether internal audit activities are properly planned, supervised, reviewed, and documented. Effective communication with the external auditor, whether he is effectively communicating or not, whether he is telling all the things or not. Nature and scope of internal audit work performed, and assessed risk of material misstatement. Risk of material misstatement means what? Inherent risk into control risk, correct? So assessed risk of material misstatement, all those factors you have to think. And then you have to use the work of internal auditor. Done. This is a direct theory question. Next. Quickly, I'll explain you about service organization first and service auditor to understand what is the base of service organization. For example, ABC Limited is the company and you are the auditor. Let us take one example. Karthik is the auditor, okay? Karthik and Co, his company. You means Karthik. Okay. Now, service organization. And there is service auditor. Your service auditor is Manisha. Service organization is XYZ Limited. Okay. Now, listen to this very carefully again. What am I telling? ABC Limited is we are all here. Okay. When I'm writing you means everyone should be here. But I'll use the word Karthik so that you are more clear. So you are the auditor. Karthik is the auditor of ABC Limited. Karthik means Karthik and team. Okay. And this ABC Limited, the client of Karthik or you, ABC Limited is outsourcing his work. It is outsourcing. Accounting work, for example. Accounting work, it is outsourcing to XYZ Limited. Okay. So ABC Limited is the company you're auditing. And ABC Limited has outsourced the accounting to XYZ Limited, who is called as the service organization. Okay. And this XYZ Limited, this auditor means this company's auditor is Manisha and Co. That is called as service auditor. Understand the words? Now let me give you a scenario now. When Karthik went to ABC Limited for audit, okay, you remember we check the internal controls. Why do we check the internal controls? To determine the nature, timing, and extent of audit procedures. Only then you'll start your audit procedures, right? Only then you'll know how much samples to be taken, how much time to be allotted, how much to be done. So when he went to ABC Limited, when Karthik went to ABC Limited company to audit, he asked the management, tell me the internal controls about accounting records. Who is the person accounting? The ABC company is telling, I don't know. It is the accounting work is outsourced. Because he doesn't know, right? In XYZ Limited, who is accounting? So he's telling, I don't know who is accounting. Then he's asking, is monthly statements being prepared? He's telling, I don't know all that. Then again, so many questions Karthik is asking to ABC Limited. Understanding the essence, Karthik is asking so many questions to ABC Limited regarding auditing work, about internal controls, because you have to check the internal controls. So when ABC Limited doesn't know anything because they have outsourced the work, he doesn't know who is reviewing that accounting, who is reviewing that records, who is doing it, when are they doing it, in how much time they're doing it, nothing he knows. Okay. Then how will Karthik decide the nature, timing, and extent of his procedures when he doesn't know what internal controls are there in ABC Limited? So what Karthik will do, he will have to approach Manisha. He will have to approach Manisha, who is the service auditor of XYZ Limited. Means who is the not service auditor. For us, for this company, means for us, it is a service auditor. Because we have outsourced the work to XYZ Limited, who is a service organization for this ABC Limited. Correct? Okay. So for the service organization, XYZ Limited is, okay, again, ABC Limited's accounting work is outsourced to XYZ Limited, who is the service organization. Service organization, this XYZ Limited auditor is Manisha. ABC Limited, whose company you are auditing, Karthik is auditing ABC Limited companies. Now, how will you identify internal controls? Because the work is outsourced, correct? Now, what Karthik will have an option is, the ISA has told, you can ask the service auditors report on internal controls. Again, the Karthik, that is you, will ask the service auditor. Who is service auditor? The service organization ka auditor. That is Manisha. So Karthik will ask Manisha, please give XYZ Limited's internal controls report. Understanding? XYZ Limited's internal controls report, Karthik will ask. That is allowed. And service auditor, the Manisha has to give the report on the internal controls of XYZ Limited to Karthik. So that, because based on this internal controls, he can decide the nature, timing, and extent of the audit procedures. Hope you understood. Let us move on. So auditor's responsibility with respect to service organizations. See, this is a direct theory question, they'll ask you. User auditor. User auditor is this. Karthik is user auditor. Service auditor is Manisha in this case. So user auditor must obtain an understanding of the services provided by the service organization. Correct? What services they are providing. This understanding must include the following. Very important question, okay? Very important question. Mark it. So this, and see what user auditor has to do. User auditor must obtain an understanding of the services provided by the service organization. For this to understand, what Karthik has to do. Nature of services provided. What nature of services you are providing? Significance of these services to the user entity. What is the importance of these services to the user entity? Nature and materiality of transactions processed. Nature of relationship including contractual terms. What is the nature of relationship between the service organization and ABC Limited? And nature and materiality. These 4 points, exact points you have to write. Done? See now. Explain reports by service auditor. I told you, that report they have to give. Manisha has to give report to Karthik. So there are two types of report. Type 1 report, type 2 report. What is type 1 report? They can ask you an objective type questions, okay? So report on description and design of internal control as a service organization. Description and design. Internal controls. About internal controls they'll give. Type 2 report is design, description, design, and effectiveness of internal control. Means control risk what we studied, no? Whether the internal controls, the type 1 report is only what are the internal controls. Type 2 report is what are the internal controls and whether the internal controls are operating effectively or not. Detailed report. Done? Okay. We shall take a break after this. One small 2 minutes break. Okay, one more concept I'll explain and then we'll take a break. Using the word of work of auditor's expert. Factors to be considered while placing reliance on work of the expert. Like valuation and all, you can't do it. No, you will not be having that much time and you'll not be having that much expertise of valuation and all. Whether the valuation all is right or not. So that you will appoint some experts, right? So whether can you use that work? Factors to be considered while placing reliance on the work of expert. Expert's qualification, membership of a professional body, whether he has a membership, whether he has license to practice, published papers by the expert. You'll check whether the published whatever papers are published, you'll check that. Personal experience with previous work done by the expert. If you have already worked with the expert prior, then you'll check how was the experience with that. Independence of expert, whether it is independent with the organization or not, whether it's the client or not. Professional competence of expert. Relevance and reasonableness of experts. These three, what I've underlined, these 3 points, no? This carried 2 marks in your exams. So these 3 points, so you have to write. If this question comes, factors to be considered while placing reliance on the work of expert. These 3 points should be there in your answer to score 2 marks. The remaining 2-3 marks will be from these points. So what are the points? Relevance. Use these words. relevance and reasonableness of experts' work, whether it is relevant, whether it is relevant, whether it is reasonable. So relevance and reasonableness of experts' work, relevance and reasonableness of any assumptions and methods used by the expert, whatever assumption, whatever methods are used, whether it is reliable, whether it is relevant, whether it's reasonable. Consistency with another audit evidence, whether it is consistent with whatever other audit evidence we are getting, no, whether it's consistent. These 3 points you have to write to score 2 marks. If this question mark comes, these 3 points you have to write, along with that some other points. Understood? Now, don't have to learn this blue wala part, but you have to understand. Should the auditor mention the name of the expert in the audit report? Objective type question. Should the auditor mention the name of the expert in the audit report? Should he mention the name of the expert? The auditor must not refer the work of auditor's expert if the audit report contains an unmodified opinion. If auditor is giving good opinion, don't mention his name. If an auditor can make a reference to the work of an auditor's expert if the auditor issues a modified opinion. If good opinion, do not give the reference of his work. If modified opinion, then give the reference. Can make a reference. However, be very careful. However, this does not reduce auditor's responsibility for the opinion. Still, who will be responsible for the opinion? Auditor. It is not like expert has done this work, because of that I'm giving this opinion. Still, who will be responsible for the opinion? Auditor only will be responsible. Very important point. They'll give you an objective type question. This does not reduce the auditor's responsibility for the opinion. Using the work of expert does not reduce the work of auditors. The external auditor has sole responsibility for the audit opinion expressed. Correct? The external auditor has the sole responsibility for the audit opinion expressed. Done? Just take a 2 minutes breather and we'll resume again. Okay, so let's have some talk. Anyone wants to speak anything? Can unmute yourself and tell me. How is it going? Is it benefiting you? Are you understanding?
Yes, ma'am.
Okay. Drink water. Keep on drinking water. Even while you're studying, no, you should keep on drinking water. Are the spelling mistakes acceptable in exams? Yeah, but those are very basic spelling mistakes. It's okay. Yeah, it should be readable. Sometimes it happens, right? Yeah, it's acceptable. Shall we start? Shall we start? Yes. Okay. Computer assisted audit techniques. We'll not go much in this. Quickly we'll finish because it's a theory part. Audit software test data. Very important from objective type of question. We'll just discuss what it is. Substantive procedures. Remember, it is audit software. Test data is test of controls. Again, audit software, substantive procedures. Test data, test of controls. Remember this, very important in test data. Entering data into an entity's computer system. Very important from objective type of question. What is test data? Entering data into an entity's computer system. So test data techniques are used in conducting audit procedures by entering data into an entity's computer system and comparing the results obtained with predetermined results. Means in the entities, you're gonna input something, you're entering some data and getting some results. and already you would have got some results. You'll compare these both. That is test data. So be very careful. If they give you an objective type question, entering data into an entity's computer system is test data, and test data is used for test of controls. Audit software is computer programs used by the auditors as part of their auditing procedures to process data of audit significance from the entity's accounting system. And audit software is used for substantive procedures. Okay. Now, direct theory question. What are the advantages and disadvantages of CAT? Kindly go through it. Okay, you can learn this. We are done with this, right? Any doubt, anyone? Is this last topic? Audit documentation, very important, very important, very important. Okay. Audit documentation. What is audit documentation? It is a record of, what is audit documentation? Is the font size okay? Are you able to view, right? Okay. Audit documentation. It is a record of audit procedures, relevant audit evidence obtained, and conclusions reached. It is all a record. It's a record of audit procedures, relevant audit evidence obtained, and conclusions reached. Now, direct theory question. What is the purpose? Why audit documentation is important? What is the purpose of audit documentation? Evidence. It provides evidence that audit was planned and performed. Enables the audit team to be accountable for their work. Correct? All these words you have to use. Accountable for their work. Enables conduct of quality control review. Allows a record of matters of continuing significance to be retained. Provides evidence of the auditor's basis for a conclusion about the achievement of overall objective of audit. Assists the audit team to plan and perform the audit. Assists the auditor to direct, supervise, and review the work. Very simple, 6 points. Easily you can write. That is, assist the audit team to plan and perform the audit. Enables the audit team to be accountable for their work. Plan and perform, and enables the audit team to be accountable. 2 points related to audit team members. Next, plan and perform and conclusion related to auditors. Assist the auditor to direct, supervise, and review. Plan, perform, conclusion, direct, supervise, review. All related to auditors. You can connect, right? You have to write these points. Then quality control reviewer. It will help them. Allows a record of matters of continuing significance to be retained. Continuing significance to be retained means what? For example, engagement letter. You have to retain it, right? Every year it will be the same. Only in some situations you have to revise it. So if you're documenting it every year, you can use that. You have to retain that. Okay. Next, factors affecting form and content of audit documentation. Very important. What are the factors affecting form and content of the audit documentation? Size and complexity of the entity. Larger the organization, you have to write this explanation also, okay? Only points will get half of mark. Explanation also you have to write down. So size and complexity of the entity. Larger the organization, more audit procedures will be performed. Hence, larger will be the content or size of the working paper. Nature of audit procedures to be performed. More audit procedures performed, larger will be the content or size of the audit. See, size and complexity means what? If there are more subsidiaries, if there are more branches, if there are more warehouses, all that. So larger the organization, more will be the procedures, more will be the content and size. Nature of audit procedures, more audit procedures performed, larger will be the content or size. Identified risk of material. Risk is more audit procedures, more will be the size. Same. Higher the audit risk, more audit procedures. Correct? Simple, just have to write in sentences. Nature and extent of exceptions identified. What do you mean by exceptions? What do you mean by exceptions? Chat box. Ma'am, can we learn 4 points? Out of? Learn 6 points. Always learn 6 points. Maximum direct theory question is for 6 points. Exceptions means differences. Exceptions means differences, meaning the management told you something, correct? When you audited, you got something, some different amount. So there is a difference, right? So more the differences, more the exceptions, then audit procedures to reconcile them will be performed. Hence, larger will be the content or size of the working paper, correct? You got some differences. You have to reconcile them with the management why these differences. So more will be the contents or size of the working paper. Working paper is nothing but audit documentation. Audit methodology and tools used. If auditor performs inspection of document as a major audit tool or procedure, then larger will be the content or size of the working paper. So depending on the methodology and the tools used, the larger will be the size. Significance of audit evidence obtained. Learn this very carefully, okay? Headings, if you learn, right side you can write it on your own words because it's very simple. Done? Next. Other points to be noted. Very important. Focus. Audit documentation is also known as working papers or work papers. Audit papers, whatever you're documenting, no, you have to maintain it for how many years? Minimum 7 years you have to maintain it. Minimum 7 years. Working paper should be assembled within 60 days from the audit report date. Assembling, maintaining for 7 years minimum, but assembling after the audit report date, because there will be so many team members, right? Everyone will be doing its own work, everyone will be documenting, to again have to assemble into one file, right? So that should happen within 60 days after the audit report date. Be very careful. After the audit report date, within 60 days. Working papers are auditors property. Listen very carefully now. Working papers are auditors property. Property means it is his, and they are not part of entities accounting records. That is, the auditor is not required to give the extracts of working paper even to the client, correct? Because it is his papers, his property. Auditor should maintain confidentiality, correct? He should not disclose. Auditor should not give the working papers to the third parties unless only in two situations auditor can give the working papers to the third parties: if client has permitted or if required by the law. Can an incoming auditor, who is an incoming auditor? The new auditor, has access to working papers of previous or outgoing or retiring auditor? Can he have access to the previous auditor's working papers? Yes. Previous auditor should allow the incoming auditor to have reasonable access to working papers. Reasonable access. Reasonable access does not mean access to all working papers. Then reasonable access does not mean access to all working papers. Next. Types of audit files. Types of audit files. Permanent file, current file. What do you mean by permanent file? Continuing importance to the audit. Let us take one example. Permanent file means engagement letter, articles of association, memorandum of association, previous year financial statements. Financial statements every year will become permanent document, right? For analytical procedures and all, you will use it, right? To compare and all. Current file contains relevant to the audit. That is current year financial statements, written representations, external confirmations, purchase invoices, etc. Correct? Now, very important. Mark it. What are standardized working papers and what are automized working papers? What are standardized working papers? Checklist, specimen letter, etc. are standardized working papers. Checklist means for every audit firm, no, they'll have some particular format. Okay, you as a team member, you have to just go and check, okay, this is done. You will just keep on ticking, right? Checklist. So all specimen letter means a particular format will be there, and that format letter only you have to send this one. So everything will be standardized. So what are standardized working papers? Example: checklist, specimen letter, etc. What is the advantage and what is the disadvantage? Advantage is improve efficiency of the audit. Improve efficiency of the audit, correct? Because everything is ready, you have to just do it quickly. The work happens quickly. Disadvantage is what? Mechanically follow, right? The auditor will mechanically follow the approach without using professional judgment, correct? Will not use a judgment, mechanically follow. What is there? Okay, tick, 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 that's it. Next. Automized working papers. What do you mean by automized working papers? Computerized working papers. What is the meaning? Software packages that have been developed which can make the audit documentation of audit work much easier. They are automatically adjusted, cross-referenced and balanced by the computer. There are software where you just download some particular statement. It will automatically get adjusted, referenced, everything, all workings will be done. That is automized working paper. What are the advantages? Risk of errors is reduced. Risk of errors is reduced. Working papers will be neater and easy to review, and it will save time. Very important, okay? Very important both were. Next, contents of audit documentation of work papers. Name of the, what are the contents of audit documentation? Name of the client, important, okay? Direct theory question it is. They can ask you. Year and date, which year end you're doing. Subject matter, what is the subject matter? Financial statement, which financial statements? Working paper reference, you will give the reference, okay, this is this, this is this. Name of the preparer and the date of preparation. Who is preparing what, which working paper is prepared by whom, and date. Name of the review, who is reviewing that work, and date of the review. Objective, details and results of audit work, audit test, audit procedures performed, and conclusions reached. These are the contents of audit audit documentation. Done. We have still lot to cover. Okay. What is fraud? Intentional act. Correct. Fraud is intentional act. Fraud risk factors is incentive or pressure. There will be some, either it will be some incentive or pressure to commit fraud. That will give an opportunity to commit fraud. Okay. Two types of fraud: fraudulent financial reporting and misappropriation of assets. You need not know that much. This is very important from objective type of question also, and direct theory question as well. Very important. Okay. 6 points you have to remember. That's it. Very important. What is the auditor's responsibility in relation to fraud? One question I'll ask you. Whose responsibility is it? Whose responsibility to whose responsibility is to detect fraud? Auditors or management? The primary responsibility is always of the management. Remember, it is always the primary responsibility of the management. So the primary responsibility for the prevention, detection of fraud is with TCWG and the management. Correct? Auditor is responsible for obtaining reasonable assurance. What is our objective? Not to detect fraud, to give an opinion, to give reasonable assurance that the financial statements are free from material misstatements due to fraud or error. Maintain professional skepticism throughout the audit by being alert to possible misstatements. Auditor must respond appropriately to fraud or suspected fraud. Discussion among the team members, inquiries of internal auditors, TCWGs, written representations from the management. All this is the auditor's responsibilities in relation to fraud. Evaluate whether the accounting policies, review any 6 points you can write. Okay, this is a direct theory question. Reporting on fraud. If auditor identifies fraud, auditor should report timely basis to appropriate level of management. If fraud involves management, then report it to TCWG. If TCWG is also involved in fraud, then report to regulatory or enforcement authorities. Done. Very important, very important. Again, this part is very important. Okay. Auditor's responsibility with respect to laws and regulations. Is auditor having any responsibility with laws and regulations? Yes. Two types of laws and regulations. Laws directly affecting financial statements, other laws. If it is laws directly affecting, yes, it is auditor will be responsible, and you have to check the compliance with this. Correct? Check the compliance if it is laws relating to financial statements. Now, be very careful. This part is very important. Other laws. Auditor's responsibility with other laws. Only when will the auditor be responsible? When there is some non-compliance. Auditor has to do or perform audit procedures only when there is non-compliance of other laws. If it is compliance, you have to check, you have to do only when there is non-compliance of other laws. But if it is laws relating to financial statements, compliance you have to check. But for other laws, be very careful. For other laws, only when there is non-compliance. Read this word properly, non-compliance. Then you have to perform audit procedures. Relating to what? Only relating to penalty. Other laws, non-compliance, perform procedures only relating to penalty. Whether that penalty should to be shown as SOPL item or provision should be or a provision. Should be expensed off or provision. Simple. This part was very important. Be very careful. Communication with TCWG. Kindly read this. Matters to be communicated with TCWG. Okay. All this have already discussed the points, nothing new. To just read this and understand and learn these points. Communicating deficiencies in internal control matters to be communicated. Just read this. Blue means just read it. Importance of communication with TCWG, direct theory question. Learn 6 points. Okay, with TCWG. Very important questions, these both are. Matters to consider when determining whether a deficiency in internal control is a significant deficiency. See, you have understood that there is some deficiency in the internal control. Now, to determine whether that deficiency is significant or not, okay, what are the matters you have to consider? Likelihood of the deficiencies, the susceptibility of loss or fraud, amounts exposed to the deficiency. Based on the amounts, based on that, you will check whether it is significant or not. The volume of the activity, the importance of the controls, the cause and frequency, and the interaction of the deficiency. So these are the matters you have to consider to read the question properly. What it is, you know that there is a deficiency in internal control. To know whether the deficiency is significant deficiency or not. So what matters to be considered is these matters. Next. What are the indicators? What are the indicators of significant deficiencies in internal control? Remember, what are the indicators? This was these are the matters to consider whether determining whether a deficiency in internal control is a significant deficiency. Matters you will consider. Here, what are the indicators of significant deficiency in internal control? Evidence of ineffective aspects, absence of a risk assessment process, evidence of an ineffective entity, evidence of an ineffective response to an identified significant risk, misstatements detected by the auditor's procedures. All this. Read these 2 points properly. Whichever question comes, write these points, you'll get full marks. Okay. Audit evidence. Okay. Very important. This one you have to learn. I'm telling you, this one you have to learn. Factors affecting sufficiency and audit evidence. Sufficiency means what? Quantity of audit evidence. Very important. These 4 points you have to write. These 4 points. Only then you'll get marks. Along with that explanation. What is the sufficiency? What are the factors affecting sufficiency? Risk assessment, materiality, results of audit procedures, and cumulative audit knowledge. Appropriateness. Factors affecting, very important question. Factors affecting reliability of audit evidence. Direct theory question. External evidence is more, okay, this is important, okay. External evidence is more reliable than internal evidence obtained, right? Right? If I tell you sales invoice or purchase invoice, tell me which is internal evidence and which is external evidence. Tell me. Which is internal evidence? Tell me which is internal evidence. Tell me which is internal evidence. Internal evidence is sales is internal evidence, right? And purchase is external evidence. Because purchase evidence will be you will getting it, and sales evidence, sales invoices you will generate it itself. You will only generate it. So there is chances of fake invoices being made. So external evidences is more reliable than internally obtained evidence. So this question can come, factors affecting reliability. Written evidence is more reliable than oral evidence. Evidence obtained from original documents is more reliable than those obtained from photocopies. Evidence obtained directly by the auditor, external confirmation is more reliable. Evidence obtained from entities record is more reliable when the internal controls are operating effectively and efficiently. Correct? This is the last part and we are done with it. We are done with today's agenda then. Okay, quickly, very easy this is now. Okay. External confirmations. What do you mean by external confirmations? What do you mean by external confirmations? Representations of information from third party. Okay, external confirmations are to be received only from five things. That is receivables, payables, banks, litigation and claims, and inventory held at third parties. Only for these 5 items, you will have to use the word external confirmations. And you will get external confirmations. Remember, external confirmations is also called as circulation letters or circularization. What is it called? circularization. Use this word. Whenever they give this word circularization, you have to understand they're talking about external confirmation. Okay, let us go quickly through receivable confirmation. Two types of confirmation: positive confirmation request, negative confirmation request. Positive confirmation request means respond directly to the auditor whether they agree or disagree with the amount stated in the confirmation request letter. Negative confirmation request means respond directly to the auditor only if they disagree. Be very careful, use these words: agree or disagree, positive confirmation; only if they disagree, negative confirmation. Now I'll just explain you this part also once. Okay, see, in these four, listen to me, in these four, 1, 2, except bank, 3 and 4, in these four, what will happen? The management will send the confirmation request to the third parties, to the debtors, to the payables and all. Okay, like to the receivables, to the payables, to the lawyers, and to the third party warehouse owner of those. The debtors have to directly respond to the auditor. Directly respond to the auditor. Be very careful. Who will give the confirmation request? The management will send the confirmation request to the direct debtors and all. Debtors, payables, litigation and claims, and the warehouse thing. But those people has to send these, they have to respond directly to the auditor in all these four cases. In case of bank, remember, the confirmation request is also sent by the auditor, and the bank should directly respond also to the auditor. There is no involvement of management at all. The confirmation request also should be gone through the auditor itself, and the bank should respond directly to the auditor only. Be very careful, objective type question they can ask. Next, when to use negative confirmation request? Very important direct theory question. When to use negative confirmation request? Only if all of the following are present. Risk of material misstatement is low. The risk is low. Internal control is operating effectively. Strong internal controls. Debtors consist of large number of small value account balances. Large number small value of accounts. But there are many debtors. That time you can use negative confirmation request. Very low exception rate is expected. Very low exception means difference rate. Very low differences. Whatever you are identifying and whatever management has given, very low difference. Minimal difference. That time you can do. Auditor is not aware of circumstances to disregard the request. Non-response is low. You know that the front party will respond. So in these cases, only in these cases, negative confirmation request can be given. All should be present. Next, sample selection of receivables for circularization. How will you select samples? For example, there are 1,000 debtors. You can't send confirmation request to everyone, right? You have to select samples. So first, see, the first procedure sample will be selected by the auditor. Second process is the management will send the confirmation request letter. Third is the confirming party. The confirming party means who have to reply back. They have to respond directly to the auditor. This is the process what happens. So how will the sample selection happen? Old unpaid accounts, accounts written off during the period, accounts with credit balances, accounts settled by round sum payments, even nil balances, and accounts which have been paid by the date of examination after the end of the financial year also. All these we will take in the under sample. Next, payable confirmation, okay. Bank confirmation, I told you no. Contents of bank confirmation request: account description, details of security, types of currency. Read it, okay. What I want you to understand is this one. Objective type question. Very important. The content and dispatch of confirmation request is the responsibility of auditor. I said, other four is the responsibility of management itself. But only and only in case of bank, the confirmation request will be dispatched by the auditor. Auditor will give it. Objective type question. The confirmation request should be authorized by the client. Authorized by the client, but should be dispatched by the auditor itself. Bank should send reply directly to the auditor again. the confirmation request should reach the bank balance management at least 1 month in advance of the year end, because everyone has bank accounts. For everyone, bank will keep on just giving this one confirmation request. So at least 1 month prior, you have to give in advance the confirmation request. Next, litigation and claims. Types, two types, okay? Letter of general inquiry and special inquiry. What is letter of general inquiry? They can ask you an objective type question. Details of litigation and claims, lawyer's assessment of the outcomes of litigation and claims, lawyer's estimate. So in this, what is happening is, letter of general inquiry is request the external advisor to inform the auditor the following. Means you are not giving any details. Be very careful. They can ask an objective type question. What is letter of general inquiry is? You are not giving any details about the client to the auditor, to the advocate. What you are telling the lawyer is, this is our client. Kindly give whatever details you know. So read. Request the external legal advisor to inform the auditor the following details. Details of litigation and claims against that client. Lawyer's assessment of the outcome. What will be the outcome? Positive or negative, means whether will win or lose. Because win or lose, based on that, they have to disclose or they have to create a provision. Or lawyer's estimate of financial implication, including cost. What will be the cost? What will be the penalty amount? And what is the lawyer's cost? Special inquiry in these cases. It's a direct theory question. Special inquiry, they can ask you. You have to learn this. Okay. Okay, done with almost everything. Audit sampling is pending. Quickly, I'll just tell you. Random selection is an equal chance of selection. Okay. Random selection is a statistical sampling. Only random sampling is statistical. Random selection means every item, every sample in the population, every item in the population has an equal chance of selection. Haphazard selection means sample from a sample. What is it? Sample from a sample. Haphazard selection means what, you know? For example, there was 10,000 invoices. 10,000 invoices. Out of that, first you chose 1,000 as your sample. First you chose 1,000 as your sample. Okay. After that, you came to a conclusion that 1,000 is too much sample. Too much it became. Then again, from this 1,000 sample, you are choosing 600, 500 samples. So this is called haphazard sampling. Means at the first point, everyone had an equal chance of selection. But again, when you're taking from a sample, these 9,000 doesn't have an equal chance, right? So this is again a non-statistical sampling. It is a haphazard selection. If you read, you will understand. I've just explained you in short. Systematic selection means what? The first selection you will do randomly, and then you will keep some interval. For example, you will select the 50th invoice, for example. Then you are keeping an interval of 10. Means you will be selecting 50, 60th invoice, 70th invoice, 80th invoice, 90th invoice. You will be selecting like this. Correct? So is every sample having an equal chance? No. Because from 51 to 59, they don't have a chance of selection, right? Because you've chosen based on intervals. So constant interval, random start. This is the direct theory question, methods of audit sampling. Okay. What is block selection? Block selection. An auditor may use a sample of, what is block means? Out of these, for example, 10,000 samples, for example, 1,000 samples are there. For example, 1,000 invoices are there. 1,000 total population is 1,000. You are selecting a block. For example, 200 to 450 invoices you are selecting. This is a block selection. In this also, everyone will not have an equal chance, because once you have selected a block, the others don't have an equal chance. Correct? See, example, an auditor may use a sample of 50 consecutive checks to test whether checks are signed by authorized signatories rather than picking 50 single checks throughout the year. Correct? Monitor using sampling means you will set an amount. Okay, below 1,000 rupees, I'm not gonna consider in my sample. So you're setting a monetary unit limit. So in this also, it will be a non-statistical, means everyone will not have an equal chance, because below 1,000, you'll not be selecting only, right? So there will not be an equal chance of selection. Now, difference between statistical sampling and non-statistical sampling, again a direct theory question, very easy. Statistical में क्या होता है? Random selection. Here does not involve random selection. Random selection means equal chance of selection, does not have an equal chance of selection. Use probability theory. Probability means 50-50 chances. Here does not use probability theory. Sampling risk can be measured, sampling risk cannot be measured. Can be measured, cannot be measured. Now, what do you mean by sampling risk? We studied audit risk, right? It is similar to that. The possibility that the auditor's conclusion based on a sample may be different from the conclusion that would be reached if the entire population were subject to the same audit procedure. I'll tell you in short what is sampling risk. Sampling risk means now based on a sample you came to a conclusion. For example, the same procedures if you had applied for the whole population, the conclusion would have been changed. That is sampling risk. Understood? Done. Okay. Thank you for your patience and hope it will benefit you in your exams. Tomorrow we'll be discussing more about the paper pattern and this one. So today's whatever were the direct theory questions, I'll be sharing you the notes in some time. Whatever were the direct theory questions, kindly go through it properly and at least try to learn 6 points from that. And whatever I had marked at objective type questions, go through that also once. And tomorrow when we are starting 4 o'clock, audit risk. What is the agenda of tomorrow? I'll just tell you how we are going to start. Okay. Tomorrow's plan. We'll start with corporate governance. Okay. Then we'll do professional ethics. Because today we did both other two subsequent events and going concern we finished, right? So if possible, even do the objective, you even start solving the MCQs for that. Okay. Study hub, exam kit, solve those questions. Corporate governance, professional ethics, and then I'll start with audit risk case scenarios. Okay. Obviously, all case scenarios will not be possible, but I'll give you a pattern how to write it. I'll explain you some 10 to 15 or maximum 10 to 15 audit risk scenarios in 1 hour. And I'll tell you how to complete your sentences. Many people are not completing the why part, they are forgetting. Why part is very important, which I'll tell you tomorrow. Then then I'll continue with internal control deficiencies. Okay. And then substantive procedures. Substantive procedure is nothing but if you know it, you know it. You have to learn it. There's no other way for substantive procedures. And many students are doing it. Substantive procedures, there's no problem. So we'll be focusing more on these. Okay. And then after that, I'll tell you how we'll have to attempt the paper. The last will be how we'll have to attempt the paper. How many minutes you have to spend, how will you do it, how do you do it, all that I'll tell you. Okay. Hope you enjoyed it. Thank you so much, everyone.
Thank you, ma'am.
Thank you. We'll continue tomorrow.
Thank you, ma'am.
Welcome. Okay, I'll just stop the recording. Stop the recording.